做一些投资理财，包括买基金或者是买投资型的保单，这些来做自己的一个退休理财的概念。自己也是透过定期定额买基金跟买保险的方式来做生活当中的财富跟退休理财的规划。那我觉得定期定额是一个很重要的一个习惯啊，包括说我们可能要注意适时进场啊，就不要当股市比较低的时候，或者是可以进场的时间点的时候，我们可以买比较多基金啊，就是储蓄比较多。那在获利了结的部分就是设立一个停利点，然后可以适时出场。那透过这样不断的重复的话，我相信可以帮年轻人很快的存到第一桶金。我觉得年轻人当然是没钱，可是小钱可以变大钱。我举例来讲，如果你想存1000万的话，25岁开始，每一个月只要存5000块。报酬率是6% 的话，到你退休的时候，65岁退休，你就有1000万哦。所以其实实践的复利可以帮助年轻人把小钱变大钱。所以年轻人理财一定要善用，在薪水比较低或者是你能够储蓄小钱的时候，透过实践的复利让你变大钱。聪明理财可以帮人生追梦。我觉得这个是年轻人应该好好的想一想，就是我如何用最少的成本去追求自己的梦想。那这个部分就很包括你的求学、买房，到最后你可能可以过比较世俗的生活。所以这个是一个很重要的 slogan， 希望大家能够从小开始变大。
Launched in 2006 by some of the world's largest institutional investors, the Principles for Responsible Investment, PRI, aims to bring sustainability into capital markets. It is widely recognized as the most influential organization devoted to the advancement of ESG investing globally. Let's review the 4 types of responsible investing strategies in the PRI reporting framework, which follows those developed by CFA Institute and used by the Global Sustainable Investment Alliance, among others. Screening. Negative screening, excluding sectors, companies, or practices based on specific ESG criteria. Positive best-in-class screening, investing in companies with positive ESG performance. Norm-based screening, screening investments against minimum standards of business practice based on international norms. 81% of PRI signatories reported using the screening strategy. Thematic, investing in assets specifically related to sustainability. 33% of PRI signatories reported using the thematic strategy. ESG integration, the systematic and explicit inclusion of ESG factors into financial analysis. 87% of PRI signatories reported using the ESG integration strategy. Engagement. Individual. Investors' internal staff using shareholder power to influence corporate behavior, including through direct corporate engagement. Collaborative. Similar to individual engagement, but undertaken jointly with other investors. Internal voting, using proxy voting guided by ESG guidelines, where voting decisions happen internally. 93% of PRI signatories reported using the engagement strategy. Are you prepared for the rise of ESG?
股票有赚钱吗？
因为我最近量很低，很难买。
我也是，可是我昨天收到一个脸书信息啊，你看，就是那个很有名的分析师啊，他主动传讯息给我，跟我说他可以教我投资。
真的哎，可是有那么好的事情吗？刚刚的对话，不晓得你有没有觉得很耳熟？最近金融市场忽然冒出一大堆股市名师啊、分析师助理，说要教你投资，但是很奇怪的是，他们都会要求保密，而且告诉你的投资标的连听都没有听过。你以为这是独家内线吗？大错特错，因为这些通通都是网络诈骗。你要知道，现在的诈骗集团可不是单单打电话要求你汇款而已，现在的诈骗手法已经升级到用社群网络冒名顶替，以假乱真。 例如他们冒用的是股市名人、投顾名师，甚至是证券商以及基金公司，就告诉你说自己是证券商的操盘手啊，或者是基金经理人，然后透过 FB 或者是 LINE 群组开设假账号。这种假账号大头照看起来都是名师本人，但是照片根本就是偷来的。还有他设立的 ID 会非常相似名师本人的账号，例如多一个 @ 或者是多一个字母，企图混淆视听，让人误解。然后他会不断传讯息，问你想不想要学投资，告诉你他手上有内线独家可以报名牌，还会每天传送一些投资的资料来塑造一个专业形象。平常还对你嘘寒问暖，贴对账单来博取你的信任。这一切的目的就是为了让你加入投资群组、投资平台，甚至是招揽会员。我们现在就要来解析这些诈骗新手法。很多人都会透过副委托的账户去投资国际股市，诈骗集团就是看准这个风向来报名牌。他会先要求你去开副委托的账户，然后去买港股里面的仙股，还告诉你稳赚不赔，保证获利。如果有人买了仙股，股价却暴跌，诈骗集团还会说不怕，要逢低继续加码，或者又叫你去买另外一只仙股。如果有人不愿意买的话，就会被踢出这个投资群组。但是仙股真的能买吗？其实所谓的仙股就是香港的创业板股票，它大部分股权很集中，而且呢都是属于借壳上市，遭到特定人士炒股价，容易大起大落。当诈骗集团把股价炒高之后，就开始割韭菜，你连哭都不知道要去哪里哭。所以现在很多的诈骗案件有超过90%以上。都是叫你去香港股市买仙股，甚至有人退休金全部都被骗光了。诈骗集团也有可能用假的 App 来进行诈骗哦，例如说告诉你这个投资 App 可以用10倍的杠杆操作，而且一样的本金还可以赚更多，吸引投资人来下载注册。一开始你可能会赚到一点蝇头小利，就投入更多的本金，但当你跟客服人员说想要领回获利时，客服人员会跟你说要再提保证金、管理费、海外手续费。如果你傻傻补上钱，那接下来你就会换来再也不回应的客服，因为钱早就都被卷走了。还有很多诈骗是假的海外投资，例如诈骗集团会开始游说你参加香港海外投资计划，但是事实上从资料到标题通通都是假的。可是诈骗集团会一直告诉你说赶快汇款，赶快汇款，不然就没有资格参加，影响了你的判断力，你就很紧张汇款了。但是最后呢，通通都是一场空。疫情期间待在家里很无聊吧？但是再无聊也不要到网络上去找温暖，因为诈骗集团会利用社群网络或者是交友 App。获得被害人的信任之后，跟你假交友，鼓吹你进行投资，利用境外的网站投资虚拟货币、期货、外汇，甚至是运彩博弈，或者告诉你说亲人生病了，有战地的军官想要来台湾跟你相会，结果家当通通都在海关里头，必须要靠你付钱才能把家当给拿回来。这些话术都会让被害人投入大笔金钱之后拒绝跟你联系，最后求偿无门、倾家荡产，都是活生生的例子。以上这些都是现在投资诈骗的新手法，你一定很想问，为什么警察不抓他们？因为呢，现在的诈骗不是像过去叫你汇款到指定的账户当中，现在呢都是叫你自己开户。所以虽然是他诈骗你，但是却变成你自己的投资失礼，甚至因为没有指定的账户，你根本很难抓到他的犯罪证据。至于那些名号被冒用的名人，其实比你更痛苦，因为现在所有的诈骗都发生在看不到真人的社群软体当中，所以只要诈骗集团一被发现，他只要换个名字、换个账号就可以继续诈骗，你根本就抓不到他们。如何避免自己成为诈骗集团的肥羊？请谨记3不3要。3不：不听、不加、不用；3要警觉、要查证、要报警。自己就要提高警觉来防投资诈骗，警民合作165专线一定要记得，请一定要好好想清楚，股市名师不会忽然跑出来跟你报名牌，基金经理人也不会忽然冒出来跟你说要代操，合格的证券商更不会私下透过社群软体来帮你私自开户，只要听到保证获利、稳赚不赔这几个字，通通都是投资诈骗。 中华民国证券商业同业公会、中华民国证券投资信托暨顾问商业同业公会关心您。
If you feel like your finances are out of control, you're not alone. Did you know that more than 8 in 10 people don't feel very knowledgeable about their finances? That same group says it's tough to stick to their financial strategies. As a result, only 2 in 10 people around the world feel strongly confident that they can achieve their financial goals. If you were to develop a financial plan for your family today, what would your priorities be? Here's what's top of mind for most people. Being debt-free. Being prepared for an emergency. Owning a home. Planning for retirement. Managing their finances. Supporting others financially. And managing investments. But only 1/3 of consumers have a comprehensive written financial plan. Why? It's a matter of trust. While more than 2/3 of all consumers rate trustworthiness as a very important consideration when selecting a financial professional, nearly as many don't know whom to trust. We do. Life's better with a certified financial planner professional. Most consumers who work with a certified financial planner professional are very satisfied. These same individuals are also more likely than other consumers to be highly confident in achieving their financial goals, to consider themselves very knowledgeable about financial matters, and to be very successful at sticking to their financial strategies. Certified financial planner professionals get high marks from clients on honesty and integrity, placing clients' interests first, understanding clients' needs and goals, and explaining financial matters in simple terms. On average, people say CFP professionals spend almost twice as much time than other types of financial professionals working directly with their clients, helping them develop plans to achieve their financial and life goals. What's the best way to take control of your financial future? Look for someone you can trust. A certified financial planner professional. CFP certification is the only globally recognized mark of excellence in financial planning. Find your certified financial planner professional today.
想象一下，周五的晚上，难得可以好好放松，戴上刚买的 VR 头盔，准备来一场身临其境的冒险游戏。又或者，喜欢的歌手开了虚拟演唱会，缤纷灿烂的场景中，你正准备和偶像一同欢乐。隔天，你在虚拟城市逛大街时，因为决定买下人生第一块土地而感到快乐。这就是我们常听到的元宇宙建构下的世界。简单来说，元宇宙一词是由 Meta 加上 Universe 所形成的 Metaverse， 最早见于尼尔·史蒂芬森1992年的科幻小说《溃血》。主要的内容是讲述在虚拟城市中，人类以虚拟替身来互相交流，甚至在虚拟城市购买土地并进行开发。元宇宙所带来的魅力，也让 Facebook 改名 Meta， 乃至 Apple、Nvidia 等科技巨头纷纷投入 AR、VR 等相关技术研究。那在元宇宙的浪潮下，金融又与其有何相关呢？关系可大呢。现在常听到的去中心化金融 （Decentralized Finance） 简称 DeFi， 泛指建立于区块链上且与数位资产有关的交易、支付、借贷及保险等金融应用。与传统金融服务不同的是，买方、卖方，甚至贷方及借款人都能进行点对点，透过去中心化的智能合约，进行不受中心监管的金融活动。随着这新兴且自由的金融模式，让大至机构、小到个人都纷纷投入其中。提到数位资产，这时我们就不得不提到最近很红的 NFT 啦。是不是很常看到某某艺人说我要发行 NFT 了？那 NFT 到底是什么呢？ NFT 就是所谓的非同质化代币，一个从区块链技术发展出来的加密资产。与以太币、比特币这些同质化代币不同，每个 NFT 价值不一。一张图、一首歌，甚至一篇文章都可以发行成 NFT， 甚至连你现在看的这支影片都有机会发行成 NFT。会有人要买吗？正因 NFT 可以为数位艺术赋予价值，不受限于媒介， 每一件作品都是独一无二的，这使得数位创作者多了一条可以保障权益及作品价值的途径，打开了一扇拥有无限可能的大门。透过区块链技术，为数位资产提供认证，解决过往真品判别的困难。而站在收藏家的立场，可以透过混搭颜色、穿搭配件、表情、背景等，买下一张张限量、属于自己、独具收藏意义的 NFT。这时，在社群上贴出，你绝对是万众瞩目的焦点。各家虚拟实境平台蓬勃发展，各个 NFT 如雨后春笋般出现。在虚拟城市中，不少人也开始圈地购买土地 NFT， 为的就是买一个翻身的美梦。但是，这一切真的有那么美好吗？金融世界存在着各式风险，而金融机构属于特许行业，主管机关对于其内部管控要求非常高，定有各式法规监理。但相对于新兴超前的元宇宙金融，世界各国的监管都还在摸索阶段。万一有一天你遭到骇客盗取虚拟钱包中的资产，目前这都不属于金融商品的范围，没有负责管理的机关可以求助。此外，元宇宙中的所有互动行为都将变成一笔笔被记录下来的资料，因此也会衍生出隐私保障及资讯安全等疑虑。虚拟世界还有身份认证的问题，贩售未经授权的 NFT 或平台出现假货的诈骗接二连三，屡见不鲜。元宇宙金融的虚拟跟现实世界会如何连结和互动，目前还有很多的想象空间。然而，可以确定的是，金融服务必须建立在信任之上。虚拟货币如果能够稳定价值，透过区块链等信任机制，是不是也有机会搬运实体金融服务到元宇宙世界呢？实体金融服务又该怎么满足使用者在实体与虚拟世界不同场景间的金融需求？创新的金融商业模式相当令人期待。
For more than 40 years, CCIMs have been recognized as experts in commercial investment real estate. Each year, hundreds of real estate professionals obtain the coveted CCIM PIN and join our network of more than 13,000 members in more than 1,000 markets and 30 countries worldwide.
Answer by saying, I do.
The designation of the CCIM is a game changer.
The brand is known nationwide, and it opens and provides so much access to you.
It is hands down the most recognized real estate designation there is globally.
It's the brand, it's the tools, it's the association.
It's worth every minute and every penny.
When I start recruiting, the first place I look is to the CCIM community.
And the information exchange and the ability to meet and get to know a number of other people that are doing the same thing, that we can refer business back and forth, we can learn what techniques are going on elsewhere, is an enormous resource for all of us.
And what CCIMs are doing to stay ahead of the game and competitive. And that really has helped me in what I'm doing in my business.
CCIM offers an inside track to information and the people at the center of the biggest deals in commercial real estate.
It's just about anything you want in life is controlled by somebody else. You know, it might be a lender, it might be an environmental guy. And so the bigger your network is, the more information you have, the more contacts you have.
You understand that if you're a CCIM, you don't have to ask, do they understand IR and net present value and so on, whether it's from school or not, they don't have to talk, just CCIM. So that's worked beautifully for me.
Big deals in commercial real estate demand the right tools, and CCIM keeps members ahead of the curve.
You know, that's probably been one of the biggest assets, that I could sit there and put actual numbers and charts in front of clients and give them a really good understanding of these are my choices and let them make the informed decision.
We have technology tools that are unsurpassed in the industry.
The right people, the right tools, and the right information.
You think about all the big corporations that have come and gone and fads that have come and gone, and you know, here we are. You know, we're bound together by some education and some purpose and some meaning, and CCIM is very special.
Welcome to CCIM Live. Get ready to reach for new heights. Your best year in business starts now.
我想那个退休理财的迷思啊，最重要的或者是最困难的一点，应该是从人性的观点上，我们都是在用短期的部分在看市场。可是退休理财其实是一个非常长的阶段，它应该是从开始工作到退休，那应该是至少是10年、20年、30年这样子的一个期间啊。长期来看，因为我们讲停损这件事情，我们会用短期的期间去看1年内、几个月内要不要出场。可是事实上，你如果玩长期来看的话，我觉得那个是一个非常重要的进场点。那如果看去年3月有进场的，大概平均而言，大概都可以赚8到10%。所以我们想讲一点，就是很重要的是，定期定额投资加上低点加码，然后我们是一个长期投资的资产配置。那如果是按照这样的一个循环来走的话，其实很少没有赚6%以上的。所以6% 以上，很多人以为并不容易。那如果你从长期拉起来看的话，你只要做对资产配置，然后做对这个低点加码，长期的平均绩效，事实上6%以上其实是这个几率其实是蛮高的哦。我们所有的人呢，在退休的时候，大概是可以从政府的制度当中领2笔钱，一笔就是劳保，国保加劳保是我们的社会保险，那另外就是我们的雇主退休金，就是劳退这一块。我们的国保大致上你可以领到钱就是5000块到8000块。现在劳保平均而言，每一个人大概是领每个月16000。那我们的劳退就刚刚讲的，我们的现在都是劳退新制，你大概可以领7000，每个月平均而言大概7000。所以你如果把你的劳保跟劳退加起来，其实你是没有3万块，可能2万5都不到。其实如果我们不要管劳保好了，刚刚有提到在劳退下呢，那如果你自己可以自提，也就是我自提也是提6%，所以你就有12% 的抵拨。然后我们也让投资报酬率可以提升到只要5%就可以了，我就可以让每一个人光靠劳退就有2万块。所以我们还是会认为说，最主要的主流还是来自于退休理财，还有包括我们的劳退。那另外一个就是我们非常鼓励大家定期定额的去做一个买保险，甚至买这个基金投资。保险公司里面其实有蛮多我觉得很好的这种投资型保单，或者是一个比较属于 fixed income 的债券型。在基金的部分，或者是我们很多市场的投资型商品，包括 ETF， 现在还有 ESG 就是我定期定额扣。那你平常检视一下你的绩效，那你刚看到负值的时候，你就在想说我要不要加码，而不是说我要不要停损然后你应该想说，我的报酬率已经是负的，我要不要换标的？你只要想这2件事情就好了。额外加码几次，然后平常定期定额投资，只要找对商品，其实你就等着退休。
Climate change may be the most economically impactful event in history. The cost of adapting to climate change in developing countries could rise to between $280 and $500 billion by the year 2050, according to a recent United Nations Environment Program report. Global cost estimates reach into the tens of trillions of US dollars by 2100, with the potential to shave off 1/10 of US GDP by that time if no actions are taken to forestall climate change. According to a recent Pew Research Center survey, about 4 out of every 10 US adults believe climate change should be a top priority for the President and Congress to address. Climate change is a force that is already impacting economies and financial markets. Today, there are few tools for financial professionals to include climate change metrics in their financial models, but they recognize the need to better integrate climate analysis into the investment process. A majority of investors said it is important or very important to have a definitive view on climate change to effectively manage investments today. 40% of investors already incorporate climate change information into the investment process. Of those who do, 75% believe climate change is a material issue, and 74% do it because of client demand. Of those who do not, 57% said it was because of a lack of measurement tools. Some key tools that help financial professionals do this important work include carbon price expectations included in analyst reports, increased transparency and disclosure on climate metrics, engagement with companies on physical and transition risks of climate change, continued education about climate change. With more reliable and accessible data, investors will have a stronger foundation on which to base their decisions amid the transition to a low-carbon economy. Are you prepared for the rise of ESG?
Hello, and happy World Financial Planning Day. I'm Noel May, the CEO of Financial Planning Standards Board, the standard-setting body for the global financial planning profession. Join our global community today as we promote the value of financial planning and how it can help you take control of your finances and your future.
Hello, bonjour, and greetings from FP Canada.
Greetings from Japan Association for Financial Planners.
Hi, this is Lalani Besaignot from the Financial Planning Institute of Southern Africa.
Hai, saya Muhammad Iksan. Salam dari FPSB Indonesia.
Hello, my name's Simon Culhane and I'm the CEO of the Chartered Institute for Securities and Investment.
Kira from Financial Advice New Zealand.
Hi, this is Kevin Keller from CFP Board in the United States.
Today, the global financial planning community comes together on World Financial Planning Day.
In partnership with the International Organization of Securities Commission's World Investor Week.
To raise awareness about the value of financial planning.
And the value of working with a financial planner who has committed to the standards of competence and ethics and to putting clients' interests first.
Everyone can benefit from financial planning.
With more than 200,000 CFP professionals making up our growing global financial planning community, and with more than 27,000 of them in China.
People in Brazil and all over the world can connect with a financial planner
to talk about their goals, needs, and dreams,
and collaborate with their financial planner to develop a plan on how best to achieve their financial and life goals.
Today is a good day to begin taking charge of your financial future with the help of a CFP professional.
Today is a good day to focus on what financial decisions you need to make to stay on track to reach your goals now and into the future.
Today is the good day to embrace our World Financial Planning Day theme, which is Live Your Today, Plan Your Tomorrow.
Today, we celebrate World Financial Planning Day.
Happy World Financial Planning Day, everybody.
Happy World Financial Planning Day.
一齊慶祝環球財齊人
세계 재무설계의 날 축하합니다.
Bonne journée mondiale de la planification financière.
祝愿世界金融理财日圆满成功。
Gelukkige Wereld Financiële Beplanningsdag.
आप सबको विश्व वित्तीय योजना दिवस पर हार्दिक शुभकामनाएं.
Happy World Financial Planning Day.
Happy World Financial Planning Day.
当你赚到了一笔钱，你会拿来做什么？拿去 all in 投资，还是通通拿去存起来？钱有4种用途：储蓄、支出、投资和分享。从这4件事情里，我们可以得到快乐或满足。不过，每个人对这4件事的比例分配都不一样。如果想要达成未来的理想生活，就要检视自己用钱的比例分配。话虽如此，用钱的比例就像一件绿色的底子带白色方格的衣服，有的人看像棋盘，有的人看像稿纸，也有的人看像绿豆糕。因为每个人的生活情况、 和所处的人生阶段都不同。讲得简单一点，就是要把用钱的比例客制化，依照自身情况量身打造黄金比例。说完了前情提要，让我们进入正题吧。数学和公民课都没教的知识，钱的4大用途 ，Let's go！ 首先是储蓄，有的人储蓄是为了梦想，有的人储蓄是为了累积投资的本金。但储蓄最主要的意义，其实是为了以备不时之需。万一遇到收入中断或意外的高额支出，这笔钱就能为自己和家人减轻经济上的冲击与负担。再来是支出，支出也就是指各种日常的花费，包括自己和家人的食衣住行娱乐、税金、劳健保费等等。重要的是要知道储蓄跟支出是息息相关的，顺利存钱的观念就在于先存再花，而借由记账的方式检视支出并降低开销，就能有效控管现金流哦。接着讲到投资，光是脑子里浮现的就已经族繁不及备载，但是可以投资的还有有形资产、转型资产、健康资产、人脉资产等等，想不到吧？像是外语补习班、健身房的费用，都算是投资的范围哦。如何从各方面投资自己来增加财富，也是当下每个人不可忽视的一环。不过，做任何投资前，都必须先以储蓄作为基础哦。与你分享的快乐，胜过独自拥有。没错，钱的用途最后一项就是分享，能够有能力为社会出一份力，帮助身边的人也是一种福气。给出的零用钱，给爸妈的孝亲费，借给朋友要不回来的钱，以及慈善捐款，都算是分享。这4个钱的用途，都是为了让自己幸福，更有机会快乐。幸福感一个很重要的来源就是安定感、安全感。投资规划的目的就是追求金融的安定感，一味的强调投资赚钱，而忽略了花钱维持健康和人际关系，就会失去人生应有的平衡。适度的投入在支出分享，才是正确健康的投资观念哦。此外，也别忘了定期检视分配的比例，毕竟人生各阶段的生活情况不同，视情况做调整也是必须的工作哦。只要观念正确，大原则不变，相信大家都能理出财富，理出幸福哦。
CCIM is just a wonderful way to bring professionalism and quality to our real estate industry, and I commend CCIM on its efforts in continuing that high standard.
Having access to information very quickly, being a part of networks. It's why this event is a great event to share ideas so that people can leave immediately with better information for their clients.
What's taken place in the CCIM Institute is we've become officially a global organization. 25% of our investment here in the U.S. is now global. It comes from outside the U.S. So CCIM helped me build a great business, and I'm doing business in 5 countries thanks to the CCIM Institute.
To me, it is the most powerful professional designation in commercial real estate. They have not only the education, the skill set, and literally the work history, and you also have to have that character factor that comes back into play, and they deliver. We at Stewart love to work with these kind of professionals.
Did you know investors use 6 methods for bringing ESG considerations into their decision-making, often in combination with one another? Exclusionary screening is the oldest method for evaluating ESG standards. It's centered around avoiding securities of companies based on activities that conflict with your moral values. Products involving alcohol or gambling, for instance. It also applies norms-based screening, meaning reviewing investments based on compliance with relevant international norms and standards, such as those pertaining to human rights. Best-in-class selection, also known as positive selection or positive alignment, is about investing in companies with better or improving ESG performance relative to sector peers. This method can improve the risk and return characteristics of a portfolio, as a strong ESG policy makes companies more aware of their risks and increases transparency. Active ownership is about engaging deeply with companies and entering into a dialogue on ESG issues and exercising ownership rights and sharing your voice to affect change. Examples include meeting with company representatives, filing a shareholder resolution, and engaging in public dialogue with policymakers. It is considered by many to be one of the best methods to maximize returns and reduce risks. Thematic investing is a type of investing based on following social, industrial, and demographic trends. Sustainability is at the heart of many of these trends, like clean tech, green real estate, and sustainable agriculture. The goal of impact investing is simple: to select securities with a disclosed intention to generate and measure social and environmental benefits alongside a financial return. An example of impact investing includes backing businesses that generate jobs in underserved communities. Lastly, we have ESG integration, systematically and explicitly integrating ESG considerations into investment analysis. Are you prepared for the rise of ESG?
嘉莹，最近股票有赚钱吗？
没有，最近量很低，很难买。
我也是，可是我昨天收到一个脸书讯息啊，你看，就是那个很有名的分析师啊，他主动传讯息给我，跟我说他可以教我投资，
哎，真的哎，可是有那么好的事情吗？刚刚的对话，不晓得你有没有觉得很耳熟？最近金融市场忽然冒出一大堆股市名师啊、分析师助理，说要教你投资，但是很奇怪的是，他们都会要求保密，而且告诉你的投资标的连听都没有听过。你以为这是独家内线吗？大错特错，因为这些通通都是网络诈骗。你要知道，现在的诈骗集团可不是单单打电话要求你汇款而已，现在的诈骗手法已经升级到用社群网络冒名顶替，以假乱真。例如，他们冒用的是股市名人、投顾名师，甚至是证券商以及基金公司，就告诉你说自己是证券商的操盘手啊，或者是基金经理人，然后透过 FB 或者是 LINE 群组开设假账号。 这种假账号大头照看起来都是名师本人，但是照片根本就是偷来的。还有他设立的 ID 会非常相似名师本人的账号，例如多一个 @ 或者是多一个字母，企图混淆视听，让人误解。然后他会不断传讯息，问你想不想要学投资，告诉你他手上有内线独家可以报名牌，还会每天传送一些投资的资料来塑造一个专业形象。平常还对你嘘寒问暖，贴对账单来博取你的信任。这一切的目的就是为了让你加入投资群组、投资平台，甚至是招揽会员。我们现在就要来解析这些诈骗新手法。很多人都会透过副委托的账户去投资国际股市，诈骗集团就是看准这个风向来报名牌。他会先要求你去开副委托的账户，然后去买港股里面的仙股，还告诉你稳赚不赔，保证获利。如果有人买了仙股，股价却暴跌，诈骗集团还会说不怕，要逢低继续加码，或者又叫你去买另外一只仙股。如果有人不愿意买的话，就会被踢出这个投资群组。但是仙股真的能买吗？其实所谓的仙股就是香港的创业板股票，它大部分股权很集中，而且呢都是属于借壳上市，遭到特定人士炒股价，容易大起大落。当诈骗集团把股价炒高之后，就开始割韭菜，你连哭都不知道要去哪里哭。所以现在很多的诈骗案件有超过90%以上。都是叫你去香港股市买仙股，甚至有人退休金全部都被骗光了。诈骗集团也有可能用假的 App 来进行诈骗哦，例如说告诉你这个投资 App 可以用10倍的杠杆操作，而且一样的本金还可以赚更多，吸引投资人来下载注册。一开始你可能会赚到一点蝇头小利，就投入更多的本金，但当你跟客服人员说想要领回获利时，客服人员会跟你说要再提保证金、管理费、海外手续费。如果你傻傻补上钱，那接下来你就会换来再也不回应的客服，因为钱早就都被卷走了。还有很多诈骗是假的海外投资，例如诈骗集团会开始游说你参加香港海外投资计划，但是事实上从资料到标的通通都是假的。可是诈骗集团会一直告诉你说赶快汇款，赶快汇款，不然就没有资格参加，影响了你的判断力，你就很紧张汇款了，但是最后呢，通通都是一场空。疫情期间待在家里很无聊吧？但是再无聊也不要到网络上去找温暖，因为诈骗集团会利用社群网络或者是交友 App 获得被害人的信任之后，跟你假交友，鼓吹你进行投资，利用境外的网站投资虚拟货币、期货、外汇，甚至是运彩博弈。或者告诉你说亲人生病了，有战地的军官想要来台湾跟你相会，结果家当通通都在海关里头，必须要靠你付钱才能把家当给拿回来。这些话术都会让被害人投入大笔金钱之后拒绝跟你联系，最后求偿无门、倾家荡产，都是活生生的例子。以上这些都是现在投资诈骗的新手法，你一定很想问，为什么警察不抓他们？因为呢，现在的诈骗不是像过去叫你汇款到指定的账户当中，现在呢都是叫你自己开户。所以虽然是他诈骗你，但是却变成你自己的投资失礼，甚至因为没有指定的账户，你根本很难抓到他的犯罪证据。至于那些名号被冒用的名人，其实比你更痛苦，因为现在所有的诈骗都发生在看不到真人的社群软体当中，所以只要诈骗集团一被发现，他只要换个名字、换个账号就可以继续诈骗，你根本就抓不到他们。如何避免自己成为诈骗集团的肥羊？请谨记3不3要。3不：不听、不加、不用。3要：要警觉、要查证、要报警。自己就要提高警觉，来防投资诈骗。警民合作165专线一定要记得，请一定要好好想清楚。股市名师不会忽然跑出来跟你报名牌，基金经理人也不会忽然冒出来跟你说要代操，合格的证券商更不会私下透过社群软体来帮你私自开户。只要听到保证获利、稳赚不赔这几个字，通通都是投资诈骗。中华民国证券商业同业公会、中华民国证券投资信托暨顾问商业同业公会关心您。
For more than 40 years, CCIMs have been recognized as experts in commercial investment real estate. Each year, hundreds of real estate professionals obtain the coveted CCIM PIN and join our network of more than 13,000 members in more than 1,000 markets and 30 countries worldwide.
Answer by saying, I do.
The designation as a CCIM is a game changer.
The brand is known nationwide, and it opens and provides so much access to you.
It is hands down the most recognized real estate designation there is globally.
It's the brand, it's the tools, it's the association.
It's worth every minute and every penny.
When I start recruiting, the first place I look is to the CCIM community.
And the information exchange and the ability to meet and get to know a number of other people that are doing the same thing, that we can refer business back and forth, we can learn what techniques are going on elsewhere, is an enormous resource for all of us.
And what CCIMs are doing to stay ahead of the game and competitive. And that really has helped me in what I'm doing in my business.
CCIM offers an inside track to information and the people at the center of the biggest deals in commercial real estate.
It's just about anything you want in life is controlled by somebody else. You know, it might be a lender, it might be an environmental guy. And so the bigger your network is, the more information you have, the more contacts you have.
You understand that if you're a CCIM, you don't have to ask, do they understand IR and net present value and so on, whether it's from school or not, they don't have to talk, just CCIM. So that's worked beautifully for me.
Big deals in commercial real estate demand the right tools, and CCIM keeps members ahead of the curve.
You know, that's probably been one of the biggest assets, that I could sit there and put actual numbers and charts in front of clients and give them a really good understanding of these are my choices and let them make the informed decision.
We have technology tools that are unsurpassed in the industry.
The right people, the right tools, and the right information.
You think about all the big corporations that have come and gone and fads that have come and gone, and you know, here we are. You know, we're bound together by some education and some purpose and some meaning. And
Hello, and happy World Financial Planning Day. I'm Noel May, the CEO of Financial Planning Standards Board, the standard-setting body for the global financial planning profession. Join our global community today as we promote the value of financial planning and how it can help you take control of your finances and your future.
Hello, bonjour, and greetings from FP Canada.
Greetings from Japan Association for Financial Planners.
Hi, this is Lalani Besainat from the Financial Planning Institute of Southern Africa.
Hi, saya Muhammad Iksan. Salam dari FPSB Indonesia.
Hello, my name's Simon Culhane, and I'm the CEO of the Chartered Institute for Securities and Investment.
Kira from Financial Advice New Zealand.
Hi, this is Kevin Keller from CFP Board in the United States.
Today, the global financial planning community comes together on World Financial Planning Day.
In partnership with the International Organization of Securities Commission's World Investor Week.
To raise awareness about the value of financial planning.
And the value of working with a financial planner who has committed to the standards of competence and ethics and to putting clients' interests first.
Everyone can benefit from financial planning.
With more than 200,000 CFP professionals making up our growing global financial planning community, and with more than 27,000 of them in China.
People in Brazil and all over the world can connect with a financial planner
to talk about their goals, needs, and dreams.
And collaborate with their financial planner to develop a plan on how best to achieve their financial and life goals.
Today is a good day to begin taking charge of your financial future with the help of a CFP professional.
Today is a good day to focus on what financial decisions you need to make to stay on track to reach your goals now and into the future.
Today is the good day to embrace our World Financial Planning Day theme, which is Live Your Today, Plan Your Tomorrow.
Today, we celebrate World Financial Planning Day.
Happy World Financial Planning Day, everybody.
Happy World Financial Planning Day.
一齊慶祝環球財七日。
세계 재무설계의 날 축하합니다.
Bonne journée mondiale de la planification financière.
祝愿世界金融理财日圆满成功。
Gelukkige Wêreld Finansiële Beplanningsdag.
आप सबको विश्व वित्तीय योजना दिवस पर हार्दिक शुभकामनाएं।
Happy World Financial Planning Day.
Happy World Financial Planning Day.
各位现场的长官贵宾，各位女士先生，大家早安，大家好，欢迎莅临2022世界投资者周联合论坛第3天的活动。我们的会议稍后即将开始，邀请现场的贵宾准备入座。开始之前提醒各位，为了维护论坛的品质，请将您的手机转为震动或是静音模式。因为目前尚在防疫阶段，除了台上合影或演讲的贵宾之外，邀请所有的来宾在论坛全程中佩戴口罩。另外，今天大会提供同步翻译服务，如果有需要翻译设备的来宾，欢迎至报道台以证件借用。频道1为中文，频道2为英文。再次欢迎各位的莅临，我们的论坛即将开始，谢谢。Distinguished guests, ladies and gentlemen, welcome to the third day of World Investor Week Forum. We are about to begin in 5 minutes. Please take your seats and be kindly reminded to switch your cell phone to silent mode. Due to the pandemic, please do not eat or drink in the venue, and please wear a mask and maintain social distancing. Simultaneous interpretation device is available today, so please head to the reception area and leave your photo ID to borrow one. Switch to channel 1 for Chinese and channel 2 for English. Our forum will begin shortly. Thank you very much.
As we at FPSB work on this issue with IOSCO and others at the global level, and through FPAT and our network of affiliates at the local levels, we encourage you and all of our stakeholders around the world to join us in recognizing and promoting the value of financial planning.
Hello, and happy World Financial Planning Day. I'm Noel May, the CEO of Financial Planning Standards Board, the standard-setting body for the global financial planning profession. Join our global community today as we promote the value of financial planning and how it can help you take control of your finances and your future.
Hello, bonjour, and greetings from FP Canada.
Greetings from Japan Association for Financial Planners.
Hi, this is Lalani Bisainat from the Financial Planning Institute of Southern Africa.
Hai, saya Muhammad Iksan. Salam dari FPSB Indonesia.
Hello, my name's Simon Culhane, and I'm the CEO of the Chartered Institute for Securities and Investment.
Pure from Financial Advice New Zealand.
Hi, this is Kevin Keller from CFP Board in the United States.
Today, the global financial planning community comes together on World Financial Planning Day.
In partnership with the International Organization of Securities Commission's World Investor Week.
To raise awareness about the value of financial planning.
And the value of working with a financial planner who has committed to the standards of competence and ethics and to putting clients' interests first.
Everyone can benefit from financial planning.
With more than 200,000 CFP professionals making up our growing global financial planning community, and with more than 27,000 of them in China.
People in Brazil and all over the world can connect with a financial planner
to talk about their goals, needs, and dreams.
And collaborate with their financial planner to develop a plan on how best to achieve their financial and life goals.
Today is a good day to begin taking charge of your financial future with the help of a CFP professional.
Today is a good day to focus on what financial decisions you need to make to stay on track to reach your goals now and into the future.
Today is the good day to embrace our World Financial Planning Day theme, which is Live Your Today, Plan Your Tomorrow.
Today, we celebrate World Financial Planning Day.
Happy World Financial Planning Day, everybody.
Happy World Financial Planning Day.
一齊慶祝環球財七日。
세계 재무설계의 날 축하합니다.
Bonne journée mondiale de la planification.
各位现场来宾，大家好，我们的论坛即将开始，邀请各位尽速入座，谢谢。各位现场以及线上的贵宾朋友们，大家好，欢迎莅临2022世界投资者周联合论坛的第3天。我是今天的主持人易涵。Distinguished guests, ladies and gentlemen, welcome to the third day of the World Investor Week Forum 2022. I'm your MC Ariel. 今天我们的压轴论坛由台湾理财顾问认证协会所策划主办，重磅邀请到多位国内外知名且经验丰富的专家学者。Today's forum is organized by Financial Planning Association of Taiwan, which has invited many renowned experts and scholars from home and abroad to share insights with us. 首先，我们要邀请到本场的主办单位台湾理财顾问认证协会李长庚理事长来为我们致开场词，让我们掌声欢迎理事长。Please welcome the organizer, Chairman of Financial Planning Association of Taiwan, Mr. Changgen Li, to share a few words with us. Welcome. 欢迎。
Ms. Wang, Pension Association Taiwan, ladies and gentlemen, distinguished guests, dear friends from the media, and directors of FPAT, a very good morning to all of you. Welcome to the third day of our World Investor Week. One question for the audience here and online. My first question for you is that, did you buy Taiwan equity markets with your eyes closed? Probably not, because you are all investment professionals. You're all CFPs, because before you make investment decisions, you must conduct robust analysis before you make your decision. You cannot make your decisions based on rumors, of course. This is the third day of the World Investor Week 2022. This forum is very meaningful to FPAT because our global association and its associates will be holding training seminars around the world, because we are an associate or a member of the ASCO. So this is a very important forum, because this forum is part of the ASCO World Series. So this is a very important event for FPAT. 2022 is quite unique and very different from the years before. So in order to help policymakers, investment professionals, and the general public to broaden their perspective and to have a holistic view of the market and understand the past and the future, this year we worked with 5 other partners to organize the World Investor Week in order to find new insights into this new world. So this morning, we are pleased to have Dr. Paul Krugman to give us his keynote presentation. And after that, the Honorary Professor of Finance, NCCU, Dr. Zhou Xingyi, will moderate our panel discussion, joined by Dr. Chen Minglang, Professor of Economics, NTU, and the CIO of Cathay Financial Holdings and Chairman of AIGCC, as well as Christina Liu, the Managing Director of Bellwether International Group, to join us in the panel discussion. And after the panel discussion, we will have Dr. Tao Dong, Senior Advisor of Private Banking Asia Pacific, Credit Suisse, to give us a keynote presentation, followed by another panel discussion joined by Dr. Tao Dong and Dr. Roy Lee, Senior Deputy Executive Director of Taiwan WTO and RTA Center, Zhonghua Institute for Economic Research. And in the afternoon, we will be focusing on financial inclusion, and also a number of distinguished guests from Japan and also from Malaysia to discuss the advancement of super-aged society in Japan and JAFP strategies. And in the third keynote presentation, we will be talking about what next after CFP certification program in Malaysia, IFP as a post-CFP certification program. So today's forum will focus on the dynamics of today's capital market and how to find new insights. CFP is an internationally recognized certificate. So when we work with other partners, we decide that this should be an international forum. Because in Taiwan, I hope that investment professionals, especially our CFP members and CFP holders, you should be able to understand what's going on in the world and introduce the latest insights, the best products and strategies to Taiwan, and help the general public in Taiwan to create wealth and to preserve their capital. So I'm pleased that in Taiwan, the FPAT has increasing exchange with our global counterparts, and that's why today we invite friends and investment professionals from Japan and Malaysia to deliver their presentations. I think that international exchange plays a very, very important role, and with that, I think that we can learn from other countries in terms of how they do financial plannings for their general public, and whether or not we can learn a lesson or the best practice from them. I know the market is very volatile, and some investors may lose some of their wealth as a result. So right now, we have to think about how to help our CFP holders to judge the market environment more accurately and navigate current market environment. I think that's very important, especially for all the CFP and AFP holders. This is a critical moment for us. And this is our social responsibility for the general public. We want to make positive contribution to Taiwan and the society. Finally, I would like to thank all the participants and the keynote speakers for your contributions and your supports to FPAT. And I would also like to thank all of you, both here and online, for your participation and supports. And I would also like to thank all the staff for your hard work. Finally, I wish all of us to navigate marketability and have a better life. Thank you. Thank you, Chairman Lee.
今天的第一个主题演讲由众所期待的年度重磅讲者2008年诺贝尔经济学奖得主 Paul Krugman 保罗克鲁曼带来分享。Next is our highly anticipated session with the winner of the 2008 Nobel Memorial Prize in Economic Sciences, Professor Paul Krugman。克鲁曼教授的理论研究领域是贸易模式和区域经济活动，分析解释了收入增长和不完全竞争对国际贸易的影响，并且在2008年以对于贸易模式与经济活动趣味的分析获得了诺贝尔经济学奖。而今天教授即将带来的主题是 Inflation and the Future of Financial Assets. Joining us online today, Professor Krugman will be talking about inflation and the future of financial assets. But before the professor begins his talk, we would like to invite our distinguished guest to come up stage and take a picture with him. 在我们今天的这个教授开始演讲前，我们会先邀请一些来宾来跟他合照。不过现在我们先一起来欢迎教授好吗 ？Ladies and gentlemen, please welcome Professor Krugman. Welcome.
Hello.
Professor Krugman, we would like to take a group picture with you. So right now I would like to invite some of our guests to come up stage. Is that okay with you? Yeah. All right.
Fine.
Yes. 好，那我们现在欢迎台湾理财顾问认证协会李长庚理事长再度回到台上，欢迎。接着我们欢迎退休基金协会王丽玲理事长，欢迎。好，紧接着继续欢迎台湾财务金融研究协会黄昭景理事长，有请。还有证券投资信托暨顾问商业同业公会尤昭文副理事长。我们请几位贵宾站在我们的舞台，靠您的左侧边。接着我们继续介绍我们今天下午论坛。首先是主持人政治大学财管系名誉教授周行一，欢迎教授。接着欢迎中央研究院经济所研究员暨台大经济学系教授陈明朗教授，欢迎是我们的语坛人。好，以及国泰金融控股股份有限公司投资长暨亚洲投资人气候变迁联盟主席陈淑芬， 还有我们香港北威国际集团董事总经理暨台湾大学财务金融系教授刘义如。好，这是我们的语坛人，当然还有我们星光人寿的资深副总经理谢一中，我们也欢迎我们的副总经理，还有联博投信董事长翁正国。邀请我们今天众多贵宾，那么待会呢，也邀请我们的贵宾可以暂时摘下口罩来进行合影。好，我们邀请我们的专业摄影师来帮我们看看怎么样的站位会比较让画面比较协调。Okay, so I'd like to invite our guests on stage to move to the center a little bit and then look at our camera in the front. 好，我们先拍摄第一张 ，We'll take the first photo. 好，我们继续看向前方镜头。Okay, please give us a thumbs up. Thank you. 好，1、2、3。谢谢，我们先掌声邀请我们的贵宾先回座，谢谢。我们台上贵宾可以先行回座了。Thank you very much for taking the picture with us. Okay, and now Professor Krugman, you may begin your wonderful speech, please.
Okay, hello everyone. It's a great honor to be invited to give this speech. I'm sorry I can't be there in person, but through the miracles of telecommunications, I hope that this works. I should say good morning. I guess we're exactly at the opposite side of the clock, so it's evening for me. But in any case, hi. So I want to, in this opening speech, talk about the financial environment we have, which is a very obviously a very different environment from the one we had even a year ago. And the big question is whether this transformed environment that we have right now is in fact the shape of the future, or whether we should expect to see financial markets revert to something like what they were really before the pandemic. So will 2025 look like 2022, or will it look more like 2019? I quite strongly believe that 2019 is a better model for the future after a couple of years than the way things are right now. Although we're living right now in a world of suddenly much higher interest rates, the factors that led to a world of low interest rates before the pandemic have not gone away. In fact, in some ways, they may be stronger looking forward than they were in the past. So I'm going to make the case that what we're seeing is a temporary shock. But let me lay that out. I don't want to just assert it. Let's try to talk through what has happened, why we seem to be in a world of very low interest rates for as far as the eye could see, what has happened to make us move away from that, and why I think what's happening is transitory. So the first thing to say, as we all know, much of the world is experiencing serious inflation for the first time in 40 years. We're seeing a very sharp rise, basically mostly across advanced Western economies and to some extent emerging markets, much less so in Asia, but I really am focused, if you like, on the North Atlantic story. And the policy response to this inflation has been a sharp increase in policy interest rates. The major central banks, the Federal Reserve, the European Central Bank, smaller banks like the Bank of England, which are still important, have all moved to sharply increase the interest rates they control, which is short-term interest rates. And those increases and the expectation of further increases have led to a big rise in long-term interest rates, which are the interest rates that matter for the real economy. Investment typically reflects something more like the 10-year rate than the overnight rate on loans. It's really been quite startling and also very globalized. So here is a comparison. It's 2 days old. My apologies. But it's, or 3 days old for you. But the basic picture is clear. Obviously, we talk a lot about the Federal Reserve, which has raised rates and led to a large rise in 10-year interest rates in the United States. It turns out that in Europe, the German Bund is the safe asset, or perceived as the safe asset in Europe, so more or less the equivalent of U.S. government debt. Germany had actually negative interest rates last year, something we didn't used to think was possible, but turns out to be in fact possible. If we look at the rise in German interest rates, it's essentially the same as that in the United States. So we have comparable degrees of interest rate rise. Britain has had an even bigger interest rate increase, largely reflecting the particular day I chose was one when the British market was still in some turmoil after the adverse market reaction to the new Truss government's policies. But in any case, what we see is a large increase in interest rates. This is a source, obviously, of a great deal of stress. Part of what happened in Britain was an incipient market meltdown because of really very technical issues involving pension funds and margin calls. But in any case, this is a big shock to anyone who is making financial planning based upon a world of low interest rates. And there have been many pronouncements to the effect that this is a fundamental break, that the era of low interest rates is over. I want to argue that that's not, in fact, the case. But first, we need to talk a little bit about those low interest rates. So let's talk about interest rate trends. And I've deliberately cut this off right at the beginning of the pandemic. So I've cut it off in February of 2020. This shows three major interest rates in the world. It's very much Western Europe and U.S. focus, but this is still a very important part of the world economy. And the important thing to say is that from the early 1990s up to the eve of the pandemic, there was a very, very sustained decline in interest rates. Money got cheaper and cheaper. Borrowing got cheaper and cheaper. A few wiggles up and down, but this very distinctive trend. What was that about? So how do we understand why interest rates got so low? And as you can see there, by the way, Germany, they became negative. There are a fair number of people I talk to who say this is all artificial. Central banks printed money, they bought, particularly quantitative easing after the financial crisis, pushed down interest rates. That's a very problematic story. If there's one thing that we think we know in macroeconomics, it is that you can't simply hold
对不起，口译员受到器材的干扰、音响的干扰，所以要修复一下设备，马上回来。
Last year, but that was very late in coming, and it's hard to say that we went 30 years before the inflationary consequences of low interest rates appeared. It's the overwhelming case has to be that interest rates fell because at a fundamental level, the relative supply and demand for savings fell. And most likely that there was a fall in the demand for investment. So that we were in a world where there were more savings, more desired savings than there was desired investment, and interest rates have to fall to accommodate that. Central banks found that they had to set the interest rates that they control, which are short-term rates, ever lower in order to maintain full employment. And that in turn was reflected in longer-term interest rates, which are very much affected by expected future short-term interest rates. Of course, one thing that can move interest rates is expectations of inflation. If we're going to compare interest rates with what they were in the circa 1980, just at the end of the great inflation of the 1970s, then interest rates were high at that point, largely because people expected high inflation. But that is not the story of most of this interest rate decline. We have some direct evidence on expectations of inflation. We actually have expected inflation at this point from several different sources. We can measure expected inflation from the markets, where there are index bonds and inflation swaps and so on that give us a direct measure of market expectations. We can also just ask people. And in the United States, we've had surveys of consumers asking them what inflation rate they expect. Now, you might notice, if you want to look at details, I've looked at expected inflation over 5 years, not expected inflation over the near future, over 1 year. And there are really two reasons for that. One is that for investment demand, fundamentally for affecting the long-term interest rates, it should be long-term inflation expectations that matter. The other is that short-term inflation expectations are famously driven by just a handful of products. In the United States, short-term inflation expectations is basically the price of gasoline. So it's not a very useful indicator, but the longer-term inflation expectations are an indicator. The important point is that we did have a big decline in expected inflation in the course of the 1980s, but it's been relatively stable, at least since the mid-1990s. Has remained stable even in the face of the recent inflation, which tells us a couple of things. I'll get to another implication later on, but it tells us that long-term decline in interest rates was not really about a decline in expectations of inflation. So what was it about? I'm sorry. I did want to say this. The Federal Reserve Bank of Cleveland uses a variety of sources to estimate expected inflation and tries to estimate the real interest rate, the interest rate minus expected inflation. And what the Cleveland Fed finds is that the great bulk of that decline in interest rates over the long term appears to have been a decline in the real rate. So it's not a decline in inflation expectations driving it. It is a decline in the real interest rate. And the real interest rate, we believe, standard economics teaches us, is that the real interest rate is what affects investment demand, what affects the supply of savings. So something must have happened to the supply of savings or the demand for investment that led to a falling real interest rate over the long term. Of course, and where I'm going to go with this is I'm going to argue that the forces that led to falling real interest rates have not gone away. In fact, if anything, they're likely to be stronger once we emerge from the current fight against inflation than they were before. Okay. Many of us believe that the most important factor in all of these issues is demography. There's actually a history here. The original concerns that there would be insufficient investment demand and that you would require very low interest rates to achieve full employment and maybe even zero interest rates would not be enough. Those go back a long way. There was a widespread belief in the 1930s that we were going to have a persistent problem generating enough investment. That proved not to be correct at the time. But if you go back to that, so this is the American economist Alton Hansen laid out the theory of what he called secular stagnation in 1938. His argument rested primarily at that point on demography. He argued that a very low fertility rate, stagnation of the working age population was the culprit in what was going on. And the reason for that is that a lot of investment demand of all kinds is basically a response to growth in the population and especially the working population. If population is growing, then you need new office buildings, you need new factories, you need new housing to provide a place for an expanding working population to live. If the population is stagnant, then you don't need to do those things. You will still be doing some investing to replace capital, to replace structures and equipment that wear out. You may spend some if people's standards, they expect more space, or you want to redesign the places where they work, there will be some spending. There will be some investment in response to technological progress, which I will get to in a minute. Equipment becomes outmoded, you will spend to invest. But all of those are weaker drivers of investment than growth. A growing population is the strongest force generating high investment demand. And what happened was that population growth, and particularly working age population growth, which was quite vigorous for a long time, flattened out. So this is the United States, and I'm looking at, just because the numbers are really clearer here, I'm looking at the population of prime working years, which is ages 25 to 54. People younger than that often are not in the workforce. People older than that are fairly often not in the workforce, but in the age range from 25 to 54, people are. Men always and women often are in the workforce. The United States had rapid growth in that prime age population up until the 2000s, but it was slowing even in the 1990s and got even slower and has been basically no growth since 2010. We've had a flat working age population, which is negative for investment demand and therefore negative for interest rates. And the funny thing is that although I'm showing you a chart for the United States, the United States actually has favorable demography compared with other countries, other major economic powers. The European Union has had a declining working age population since 2010. Japan has had a declining working age population since the late 1990s. In fact, it's declining quite fast, all of which reduces investment demand. The rising economic power of the 21st century, China actually now has advanced country demography. With a low fertility rate, China is going to have a shrinking working age population very soon. They're basically following the track of Japan, even more closely than that of the United States. So all of this is a major reason for weak investment demand, and therefore for the necessity of extremely low interest rates to provide sufficient investment demand. I mentioned technology, which is the other great driver of investment. Technological change can be an important part of investment demand for actually a couple of reasons. One is that technological change makes it desirable to replace things. We can, you don't necessarily wait until your equipment wears out to replace it. You replace it because there's a much better technologically improved version that takes the place of what you're doing, and it's worth spending the money to replace that equipment. So that's one source. And there have been times if you wanted to, or technological change can generate new industries, new sectors that demand investment. So the last time there was a really strong investment boom in the United States was in the late 1990s when the telecommunications sector led to a lot of engaged in very large investment. And although our memory of the time is associated with the financial bubble, the technology industries, the dot-com bubble. A more important factor driving investment was just plain rather prosaic investments in laying fiber optic cable and other basic infrastructure for telecommunications. But that kind of is behind us now. Anecdotally, it's hard to escape the sense that for the most part, there has been a lack of exciting new technologies to drive investment. There was a time when people waited with great anticipation for the next generation of smartphones, figuring that they would be a huge improvement and people would rush out to buy the latest version. Some people still do, but basically the changes in that, and that's just the most obvious example, the one we can all see, have become quite incremental. It's really not, there's not that much difference between electronic devices now and electronic devices 5 years ago. And more broadly, the other way in which technology can drive investment is by making us richer. And then when people are richer, they demand more stuff. People want bigger houses. They want more commodious working spaces. All of these things can be roughly summarized by trying to estimate the overall rate of technological progress. So economists have a technique for doing that. Like all economic measurements, it is not something that is totally reliable, but we can try to estimate how much output we get for a given set of inputs. We can try to estimate the productivity of resources, not just labor, but the productivity of labor and capital and education all put together. That's the measure known as total factor productivity. And the odd thing that we have a great deal of hype about technology. There's we talk about it all the time. We make heroes of leaders of technology companies and all of that. But if you look at the numbers, so this is an estimate of total factor productivity in the United States. And I've done it on a log scale. I'm hoping that people are reasonably familiar, so that the slope of the line is the rate of growth. And that is kind of helpful in assessing what's going on. And the technology has been, it's not just that we're all bored about the latest smartphone. technology has in fact been a disappointment. Really since about the mid-1990s. We had a period of rapid technological progress from about 1995 to 2005. But then it tapered off, and as best we can measure, technological progress has been quite slow since then, which means that the demography is unfavorable for investment, and that in turn, and that demographic problem is not offset by rapid technological progress. Instead, we appear to have a slowed down rate of technological progress, which means a further reason for low investment demand, which leads us in turn to the requirement that we had up until very recently to have very low interest rates. Okay. What could change? Why might you think that? Okay, actually, let me say this in a different order. Why are interest rates spiking right now? Well, they're spiking because we are experiencing a lot of inflation, and major central banks are raising interest rates in an attempt to bring high inflation under control. Why is inflation spiking? Pardon me. Okay, there have been some special factors. Certainly, in Europe, a very large part of current inflation is simply the price of natural gas. So the war in Ukraine is really driving a lot of inflation. If we look at things that have driven inflation that are special factors beyond that, well, there was a rise in commodity prices, especially oil, as the world recovered from the COVID lockdowns. There were very special stresses. There were supply chain issues. During the pandemic, pandemic is still happening, but during the worst of the pandemic, during the economic lockdowns, the people unable to consume services shifted to buying goods instead. So we had a surge in demand for consumer durables, which put stress on global supply chains. There just weren't enough container ships, and the ports didn't have enough capacity to unload those ships, so that we had disruptions from the supply chain side. Many of those things are now letting up. We still have a situation, at least in the United States, probably in the UK, less clear in Europe, but we still have a situation where it appears that our economies are overheated. They are running too hot, and that's causing inflation. If you ask, why are we running too hot? Why low interest rates didn't lead to overheating before the pandemic? Well, the short answer, which skips over an enormous amount of detail, but the short answer is that during the pandemic, we protected people from financial losses by handing out enormous amounts of government aid, gigantic amount of money, which was a good thing. We got through an extreme economic disruption with relatively little extreme hardship, at least in advanced countries. But it did mean that people's purchasing power was sustained, even as the economy's productive capacity was reduced, thanks to the pandemic and the lockdowns that we undertook to deal with the pandemic, and to some extent, we had at least a temporary reduction in the workforce as people faced with risk of disease, withdrew from the workforce, and the so-called Great Resignation, which is largely over at least in the United States. But we did have a period where all of these things came together. We had reduced capacity, we had high, maybe even expanded purchasing power, which led to inflation, too much money chasing too few goods. This could have led to sustained rise in interest rates if people expected the inflation to persist. If people believed that high inflation was now an enduring feature of advanced economies. But you may recall, I showed you a chart of inflation expectations for the United States, which was notable first for the fact that if the big decline in inflation expectations was over by the early 1990s. So that doesn't explain the fall in interest rates after that. But it also shows that there's been remarkably little rise in long-term inflation expectations recently. For all of the fact that headline inflation rates have been 8% in the United States, 10% in the euro area, the people have not much revised their view about what inflation will be in the future. You could say that the public has confidence in central banks. It believes that they will do what is necessary to bring inflation under control. And we can actually look at markets. So here's where we want to look at market expectations, which are a much more precise guide, although maybe of a different set of people. And in particular, we have something, some of you may have seen it, the five-year forward inflation expectation rate. By taking index bonds of different maturities, and comparing them with unindexed bonds, we can back out what people expect the inflation rate to be, not over the next 5 years, but over the 5 years after that. And this is an interesting gauge that tells you whether people believe that the inflation process has gone out of control, whether people believe that central banks have lost their grip. And the answer for the United States, and as best we can tell for the rest of the world, is no, people do not believe that we've lost control. They actually believe that that inflation will come down. If anything, expected inflation in the out years looks a little bit lower than expected inflation did before the pandemic hit. So we're really not looking at a situation where inflation expectations are going to keep interest rates high. What about, sorry, let me go back and leave that there. And what about the other factors I talked about? Is there a reason to believe that the demographic limitations will cease to be a reason for low interest rates? Is there a good reason to think that we're going to be seeing faster growth in the working age population and therefore more investment demand? Well, the answer is no. It's actually extremely hard. If we ask the native-born working age population is already born. Fertility rates matter, do affect working age population, but with a lag of a couple of decades. So even if we were to have a sudden revival of fertility, which is not what we actually see happening, we see it declining, but native-born workforces are not going to be affected by fertility for a long time. So the demographic issue holding down investment demand is not going to go away because of changes in domestic population growth. For some countries, not all, but for the United States, and to a lesser extent, a significant extent, Western Europe, the growth of the working age population has been fed to an important extent, not by domestic fertility, but by immigration. And there, the situation is worse than it was pre-pandemic. The rate at which the rate of immigration to the United States has fallen off sharply. That was partly a result of policies by the previous president, which have not changed that much under President Biden. Partly just concerns about disease, concerns about security. In any case, the numbers are actually quite large. We currently have in the United States about 2 million fewer working age immigrants in the country than people were projecting 5 years ago. So even in the United States, 2 million people is a significant part of the labor force. So the demographic situation has not really turned around at all. Technology, the kinds of technology that have driven so much of the technological narrative over the past several decades remain disappointing. For all there's a long list of things that were supposed to be transformative that have not panned out. Virtual reality remains a curiosity. Artificial intelligence does some things. It's not really artificial intelligence, but things that we often call AI, but they tend to be specialized. So translation software has gotten infinitely better, but that's not the same thing as that's not an activity that generates large amounts of investment. The one major area in which there is a technological progress that could drive a lot of investment is actually energy. Amid all of the disappointments and the growing boredom about information technology, meanwhile, we've had revolutionary change in the renewable energy space. We went from, in a relatively short period of time, from solar and wind power being curiosities, not serious contenders, to situations where they are, in many cases, cheaper than fossil fuel generated power, and in which there appear to be learning curves comparable to those that we saw in IT. There seems to be a kind of a Moore's law for renewable energy, where the more of it we produce, the better we get at producing it, and there are continuing cost savings. And so if you were going to pin your hopes on a technology-driven revival of investment, it would probably be largely about green energy. The investments necessary to transition away from fossil fuels towards a renewables-based economy. I should mention that there are other pieces of that system that are also experiencing revolutionary progress. Battery technology. The big problem with renewables is that they're intermittent, and so batteries become extremely important to make the system work. And that has turned out to now be experiencing also dramatic cost reductions. It happens that in the United States, we have, after the extremely difficult political maneuvering, we have now passed legislation that will promote the transition to green technology. And that could be a source of increased investment demand and therefore higher interest rates heading forward. But I believe that it's difficult to come up with any estimate of the likely investment in these technologies that would be sufficient to offset the drag on investment that comes from the stagnation or decline of the working age population, the disappointing rate of technological progress in the economy as a whole. So this paints a picture which says that the year 2025 should, from the point of view of investment demand, fundamental interest rates, be like 2019, only perhaps more so because of the drying up of immigration and the continuing disappointments of technology. If we have any kind of fundamental story about why interest rates were so low, I believe that story points to them returning to those very low levels. Now, you might ask the question, if that's the case, why are they so high now? The short run answer is, as I said, we have an inflation problem that resulted from largely from the fact that we had large-scale government aid in the face of temporarily reduced economic capacity. And so central banks have raised interest rates to combat inflation. That feeds through into longer-term interest rates. But that is unlikely to be a sustained source of high rates. The need to fight inflation will not persist as the inflation comes down. There's an intense debate about how hard it will be to get inflation down. For what it's worth, I'm of the view that it's going to come down much faster than many people think. That we're already seeing many measures of labor markets cooling off, and the high interest rates that really date from only a few months ago have yet to have most of their effect on the economy. So that we're going to be seeing a lot of disinflationary pressure developing, and probably a downturn in interest rates sooner rather than later. There's a whole industry of people trying to predict what the Fed and the European Central Bank will do. When will they? What will they do at their next meeting? When will they pivot? Will they pivot? I have no insights into that. But I believe that the fundamentals will, in fact, lead them to reverse the high interest rate policy relatively soon. Not next month, not at the next meeting, maybe not even in 2023, although I wouldn't be surprised to see it happen next year, but not long after that, so that we're headed for a world of low interest rates. And what that means, and this is where I should probably start to wind down, what that means is that if we want to think about financial management, you do want to think the narrative, the story that says, okay, we had this era of low interest rates, but now it's behind us. And we're going to go back to something that people still sometimes regard as normal with relatively high interest rates. That narrative really doesn't make a whole lot of sense. I have yet to see any coherent explanation of what in the real economy would justify that narrative. It always ends up being a story that somehow implies that the low interest rates that we had before the pandemic were artificial. And that's a story that simply doesn't stand up. So I think that looking forward, we can expect really low interest rates, which of course then gets to all of the other assets. I really haven't talked about that, but as I'm sure people in this audience know, low interest rates is high bond prices. Those spill over into other assets. The prices of factors in limited supply, land, tend to be high. The price of housing, which is partially the price of land, tends to be high. The prices of stocks, there's a great deal of variation, but the prices of stocks probably will. We can ask whether was there a stock bubble, which I think there's a better argument for that than that there was a bond bubble, but maybe not that much of one. And so alternative assets, if yields on bonds are going to be low, then that's going to push up the prices of other assets. So we're going to be back, I believe, fairly soon in the kind of world we were in before the world went crazy with COVID-19. Happy to, of course, I could be wrong, but I would love, if anyone wants to make an argument against that point of view, I would love to hear it, because I don't see it. I don't see any plausible story that says that the world 2 years out from today will be able to achieve full employment without very, very low interest rates. Thank you all.
好的，让我们掌声感谢 Paul Krugman 教授带来的精彩演讲。Many thanks to Professor Krugman's insightful sharing. 那么待会呢，我们还要继续邀请 Paul Krugman 教授跟我们来进行接下来的语谈。We will also like to continue to begin the panel discussion with Paul Krugman, Professor. And 我们刚才非常感谢呢，我们的 Paul Krugman 教授，他针对了通货膨胀及金融资产的未来进行了许多分析和见解跨海连线，来跟我们进行这么精彩的对谈。Many thanks again to Professor Krugman's insightful sharing. And now we will begin the panel discussion by introducing our moderator. 我们欢迎本场座谈的主持人，政治大学财管系名誉教授周行一教授，有请。Please welcome our moderator, Emeritus Professor of Financial at National Cheng Chi University, Professor Edward Cho, to the stage. Welcome. And now please also welcome our panelists. 我们的语谈人，中央研究院经济所研究员暨台湾大学经济系教授陈明朗教授，欢迎。Mr. Minglong Chen, Research Fellow at Institute of Economics and Academia Sinica, and Adjunct Professor at Department of Economics at National Taiwan University. 国泰金融控股股份有限公司投资长暨亚洲投资人气候变迁联盟主席陈淑芬，有请 Ms. Sophia Cheng, CIO of Cathay Financial Holding and Chair of Asia Investor Group on Climate Change。香港北威国际集团董事总经理暨台湾大学财务金融系教授刘义如 ，Ms. Christina Liu, Managing Director of Bellwether International Group and Adjunct Professor at Department of Finance at National Taiwan University。我们欢迎以上的贵宾步上舞台 ，Welcome。我们待会进行的时候，也邀请贵宾也可以暂时摘下口罩。那么我们现在时间就交给主持人周教授。
Professor Zhou, please.
Professor Krugman, I'm not sure if you can see me, but I really appreciate your speech. Thank you very much for your wonderful speech.
Thank you. I can see you. You're very small on my screen, but I can see you.
Thank you very much. First of all, I would like to say that I'm very happy to be back to a FPAT event. I was the chairman of the examination board for quite a few years. I would like to thank Mr. Lee for inviting me back to this event. I think in Professor Krugman's speech, he concluded that after 2023, our economy is going to go back to the pre-2018 level, okay? Now, let me give you some figures. According to IMF, the global economic growth rate in 2019 is about 2.9%, and which is, of course, quite low, okay? And the 2.9% growth rate actually was probably the lowest, okay, in the 10 years that led to 2019, between like 2010 to 2019. And so, according to Professor Krugman, that we are going to probably have a long period of low interest rate and pretty moderate global growth rate. You know, we are in Taiwan, so I'm sure that we are all concerned about what kind of implication would that kind of situation have on Taiwan economy in the future. I believe that there are three major risks to Taiwan economy right now. Actually, the global economic slowdown has already had a negative impact on our economy. The exchange rate of NT dollars to US dollars has depreciated by about 11% since the beginning of the year. And we also know that our economy depends heavily on net exports. And in August, we had a bad number. Our imports growth rate in August was 5.5%, but our export growth rate in August was about 2%, okay, which is considered really bad. As a result of that, I think our government actually already said that this year, our economic growth rate will be lower than 3%. And compared to 6.5% in 2021, this year's growth rate is definitely very disappointing. And probably we're going to have only 2% in 2023, okay? And unlike in the United States, because we have relatively low inflation rate, I think the inflation rate in Taiwan is projected to be only about 3.5% in 2022. So our central bank actually has only raised interest rate by 0.5%. But likely, our central bank will continue to raise some interest rate, but not very much, I believe. And the second risk to Taiwan economy in the future would be the cross-strait geopolitical risk, okay? And I think most of us agree that the chance of having a cross-strait military conflict has increased substantially. And that definitely would have negative impact on Taiwan economy, okay? We are probably going to see increasing capital outflows, and decreasing direct foreign direct investment into Taiwan. And I have already heard some stories that our companies are forced by their foreign customers to move their production capacity overseas. And also, some companies in Taiwan are already considering something called alternative headquarters, which means that they're gonna have to move money to these headquarters as well. So the cross-strait geopolitical risk, the trend of that definitely is bad for our economy. And then, you know, our companies in Taiwan are also under pressure from their customers overseas in the area of ESG. Our companies are not quite well prepared for this, okay? And the ESG, as you know, as we are forced to comply with the wish of our customers, the cost of our operation is going to be higher, at least in the short term, unless in the long term we can find ways to take advantage of ESG such that we can become more profitable. So I guess actually Professor Krugman's speech has tremendous implication on Taiwan's economy too. So I'm very happy to have three very distinguished panelists joining us on our panel discussion today. And because they have been introduced to the audience, so I'm not going to repeat that. And in Professor Krugman's speech, he talked a lot about inflation expectations. I'm going to start with that to see whether our panelists can share their views on inflation, okay, in particular as it relates to Taiwan's economy. So I'm going to ask Professor Liu to talk first, please. Yes.
Okay. Thank you. Hi, Professor Krugman and all the audience. Good morning, and thank you for the moderator. I think that the moderator particularly asking us to talk about inflation expectation. Actually, that was not what I was going to talk about, but I can say a little something about it. I think that one thing that I feel pessimistic about inflation expectation is that such as follows. I do agree with Professor Krugman regarding the inflation expectation is not as high nowadays comparing with, say, 1980s, especially if we look at the tips, and Professor Krugman mentioned that too. Okay, so that's the Treasury inflation protected securities. We can see from the difference between that and the bond price to see that it's indeed the inflation expectation is not that high today. However, I do believe that there probably be another reason why it's not as high. Because people nowadays haven't experienced inflation for 40 years already. So I think that most of the people, especially before this year, they had no idea what's so-called inflation. And I think that also adds to the element that when they form their expectations, because it's relative, so they wouldn't know what's inflation. And once the inflation really stay with us for a long time and people catch up, then I think that inflation expectation may be rising. So I hope that's not the case. I hope that inflation, as Professor Krugman predicted, that it will come down sometime soon. Okay, so that's regarding the expectation. And what I have in mind, also comparing nowadays with what happened 40 years ago, one thing really troubles me and worries me, which is that the difference between now and back then, which is that I think I would like to ask a question, say, will the debt growth, will the debt-driven growth, or say debt-dependent growth for the global growth, would that be sustainable? Would that be forever, or will it come to an end eventually? And that eventually maybe now. Okay, so I would like to cite give you several figures to let you know why I'm so concerned about this debt-driven thing. Say for the 1984, that's when Paul Volcker was fighting against the inflation. At that time, the US debt to GDP ratio was 34%, 34 only. By the time before the global financial crisis, 2008, so that's 2007, was doubled to 62%. But after 2008, I think the world has totally changed ever since then, because that's the beginning of the QE. So not only the Treasury can just issue the debt, also that the central bank just printing the money and buy all those debt. So by the time nowadays, the most updated data released by the Treasury Department report of the United States 2 days ago, October 2nd. Now, the US debt, the public debt, the total amount is $31 trillion US. Relative to GDP, that's greater than 130% already. Okay, so that's one thing regarding the debt. Second, if we look at the public plus the non-financial private sector, so everybody in this world, that number, we see that the debt, total debt relative to the global GDP, that is 256%, 256%. So I think what happened, we all see that on September 23rd, what happened to the UK government, originally they had this 45 billion British pound for that tax cut. And what happened, we see immediately that 2 days later, the Monday and Tuesday, the bond market, they say that it's so terrible because you only saw sellers of the bond. You don't see buyer the bond. That trigger, of course, the following Wednesday, that's September 28th, the BOE had to go from the QT to the QE solution, trying to buy bond for the 65 billion British pound. So of course that now they reverse that policy. But still, I think that's a very vivid example to show us the risk of the traditional, we call, monetize the debt. 债务货币化. That's something very real. So that if the government cannot do something about the debt, and then eventually we have to print more money, but printing more money, eventually that goes to inflation. No matter how high the interest rate go up, if we have that high level of the debt, then actually I don't see how it's going to come to an end. As Milton Friedman said, inflation is always and everywhere a monetary phenomenon. So I think that's something really worries me. I think I'll just stop here.
Okay, well, thank you so much, Christina. I think Professor Liu just raised a very important issue, that is, if globally all these nations are heavily in debt, how is it going to impact our economy in the future going forward? I'm going to ask our two panelists to talk first before we ask Professor Krugman to address on this issue. Yeah, so please, Sophia. Yeah.
Okay, thank you. We have, as a global investor, we have enjoyed almost 10 years of a rally both in equity and bond market. And since last year, especially this year, we start to see the reverse. Maybe this is short term, but I think it created quite rapid, fast, significant risk for global financial institutions, how to respond fast and how to respond early. I have been an analyst since 1994, and I witnessed the financial crisis in 1998, 2000, 2008, 2012, and now with the global volatility. So there are a couple of things I'd like to share the thoughts from inflation and the impact of inflation. Number one, if I can put some words, number one is lack of discipline. 1998, we have corporates lack of discipline in their borrowing. 2008, we have financial institutions lack of discipline in encouraging consumers to borrow more, and they become CDOs and subprime crisis. In 2022 and today, I see lack of discipline in central bank, who should have been raising rates a lot earlier, but they have been pumping liquidity support and become a liquidity flood. And that spoil the borrower who enjoy very low rate, and now they have, when the big tide comes, it's quite hard for them to respond. Number two, I see global interconnectability. This is so important for building a world, but it also creates very good challenge today. And globalization is not just on manufacturing, it's also on investment. As Taiwan insurance company, including Cathay Financial Holdings, we have more than half of our assets invested overseas. So this is very important. And therefore, we have more information availability, and people become more knowledgeable, and therefore the market tend to move a lot faster. They will create volatility. And then we have almost 10 years now on this passive investment that actually creates, it looks like not concentration risk on the investor side, it's actually concentration risk on the area of investee company. When everyone wants to redeem the fund, we are selling the same stock. So I start to feel, a couple years ago, I started to say that I feel financial institutions have lost their role in being a money intermediate. We are supposed to give the money surplus to the money demand, but now we are spoiling the large corporate, asking them to borrow more and give them much higher investment valuation. And the third one I like to say is the reverse and response. Current inflation pressure has added a lot more pressure. Since 2003, we have this global OEM and then e-commerce that's pushed the CPI lower. And then we have global commodity cheaper. We have this globalization allow us to arbitrage some lower labor places. 2018, we start to see US-China friction. A lot of the old way in the system we have created start to have the reverse from globalization back to regionalization, to nationalization, and now to nationalism. So inflation back into commodity price, oil price, agriculture and food price, and then business disruption in transportation. And then it's become everywhere, everything a little bit more expensive. They already trigger quite painful. And that's why I think today we are seeing this inflation as part of the misery index, 痛苦指数. That we have inflation high. Yes, maybe next year inflation may come down a little bit, but by that time, I think with corporates more conservative in capex and new hiring, the new job creation slow down. So into next year, maybe inflation come down a little bit, but I think unemployment rate start to deteriorate. Net on average basis, end of next year may not be as good as today. So we still have this temporary, but I think 1 year of distortion could be quite painful for many corporates. And lastly, for Taiwan, we really depend on exports, and therefore for Taiwan corporate, how to respond fast on early prevention of in case there are business order reduction and liquidity hard to collect. For example, the Russia-Ukraine war already makes some corporate, if they have business related, they do see the money in the bank, but they just cannot get it. So earlier preparation for cash flow is also quite important. I do not expect a big consumption disruption in Taiwan because we do have very good savings. But I think, and we are also quite lucky, the interest rate hike versus other countries is not that high yet. So the pressure on mortgage payment in Taiwan is not so high. But I do concern with slower global economy whether they will affect the new job creation. And this will not be positive for the young generation after they graduate. And also, Taiwan is very sensitive to global economy, and we also have corporate in China. And therefore, when the whole world is moving to net zero or low carbon transition, China is also pushing the 2030 greenhouse gas peak, and then 2060 net zero. And they are going to have a lot of pressure to corporates in the response. So this also requires Taiwan corporates with operation in China, in Southeast Asia, to pay special attention. And we have our own path transfer to knowledge-based economy, no longer just on energy, power-based economy. And therefore, this is another big topic that we all have to work on. So I think the challenge is quite big, but I tend to believe that the equity market has already reflected probably at least half of the problem. We are into the last crash in this challenge. Yeah, but it's very important that despite this maybe short-term, through the short-term, the V-shape, the transition stage, some corporate may already disappear. So it looks okay maybe 2 years from now in terms of the market index. But I think it's a big challenge for everyone during this transition and the response. Thank you.
Well, okay, Sophia, I think you are both pessimistic and optimistic, I guess. You know, you are concerned or I guess a global financial system, right? And also you're concerned about whether we're going to have like a stagflation, like we have high inflation rate and also some high unemployment rate, right? Oh. And then, but you think that it might be a good time to buy stock right now, I think. Okay.
First of all, I think inflation will come down, but the structural inflation rate will not be as spoiled as before. Okay. Second, I think unemployment rate is quite good right now. You see, U.S., many places they have full employment already. So I see the perfect timing start to end. There was a gradual deterioration. So we have some unemployment rate increase should be expected. Okay. And then lastly, equity market, we should be looking to buy good value stocks. I don't think the large cap, the boom boost is over yet. So I think I will be looking for buying opportunity. I wouldn't be a super aggressive buyer today yet. But I think the market correction has reflected more than half of the overall challenge we have seen.
Okay, I'm going to ask you later, when should we buy? Okay. All right. Okay. Professor Chen, please. Yeah, Ming-Lang, please. Yeah.
Okay. I appreciate Paul's talk about the inflation. And when we talk about the inflation now, people always like to compare it with 80s or late 70s and early 80s. And since are similar, but may not be that similar, one difference is there was no supply chain disruption in the 70s and 80s. The same thing is there was oil price hike in 80 and now the same. And the same is also there was a government debt in the 70s, 80s and now. But difference is in the 80s and 70s there was no high-tech innovation, but we still have high-tech innovation. So putting things together, story should be different in the sense that no supply chain in 70s, but we have supply chain disruption now. But there was no innovation in 70s, 80s. We have a lot of innovation in now. Innovation, we have decreased the prices. So that lead to price expectation lower. And then since supply chain disruption is going to be over, so price expectation will be lower. But still, this government debt in the U.S., the American Rescue Plan and social safety net, totally over 4 trillion. That's huge. And in addition to that, Biden administration is trying to invest in America, to invite a lot of firms to invest in America. So there will be investment boom in the next 2-3 years. A lot of Taiwanese manufacturing companies are invited to invest in the U.S. And if we look at the experience in Taiwan in the past 2 years, a lot of Taiwanese enterprise run from China back to Taiwan. That drove a lot of investment boom in Taipei and actually in Taiwan. And that leads to not inflation, but the price of housing everywhere, basically everywhere from north to south. And U.S. housing price increased because of assets nowhere to go. Either they go to a stock, bond, but zero bond is no market because given zero interest rate. So housing and equity were the two market in the U.S. But now with investment boom, I don't think housing price will drop. Of course, when the Fed increases the interest rate, there will be a negative effect on housing price. But with investment boom, that's a positive effect. So we don't know what's the net effect. So it's still not clear to see the housing investment because it's positive and negative effect together. You need time to wait to see the net effect. And also now the global is also even the World Bank is asking U.S. Fed not to have interest hike for the next meeting or year to come, because that may generate depression in the world, especially emerging economies. So that also depends how power is going to feedback to what people think the Fed should do in the next or next few meetings, whether interest rate will increase again and again or not to say 5% in 1 year from now to go or not. So all this expected need depends on the Fed, depends on the investment, depends on a lot of things. So I'm not sure whether price expected is going to be high or not. But given that $4 trillion Biden administration debt increase, I don't have specific time frame for this. I think it's going to be 4 years. Biden already have 2 years, so 2 more years, and this $4 trillion is going to spend. If $4 trillion is going to spend, that accounts for over 16% of the U.S. GDP in this year. 16% GDP, if you spend in 2 years, that's 8% GDP. That's a lot of demand in the U.S. economy. Even without investment boom, that 8%, to account for 8%, and inflation rate would be increased by maybe 5-6%. So even if the Fed does not increase interest rate anymore, that was the expected inflation. But if the Fed increased interest rate to 5% or 4.5%, that will dampen the demand a lot, because the government increased 8% expanding, but private sector will decrease 8%, decrease some fraction of the demand. That will dampen the demand in the economy. So still, I'm not sure what's going to be for the inflation in the next 2 years, but I think 2-3 years will be what I expected. So I want to ask Paul, what's your opinion about what I think this? Okay, I'll stop here. Thank you.
All right, thank you very much. Professor Krugman, I'm sure you have heard them quite well. Basically, these panelists have quite a few interesting questions to you. They would like you probably to address on the risk in our financial system right now, and whether the global debt problem, both the public and the private debt, is going to be very negative for the financial system, also for the global economy. And then Ming Lang just mentioned about Biden administration's plan to invest a lot in the United States, and how is that going to affect the U.S. economy and then the global economy? And you, in your speech, you said that you don't know what Fed is going to do in the future, but we still would like you to guess. So could you do that for us? And then what is your guess on stock market, please? Yeah.
Okay. Stock market is I never, only once in my life have I had a strong view on the stock market. During the dot-com bubble, it was clear it was overvalued, but at this point, I really don't know about the stocks. But let me talk. Let me give you first the question of whether high debt levels pose a real threat. Before recent interest rate rises, it was easy to make the case that debt was really not much of a problem, that even though certainly public debt was high relative to GDP, the interest rates were below the growth rate of the economy. And when R is less than G, servicing debt is, maintaining a stable debt to GDP ratio is actually not a problem at all, no matter how high the debt may be. For the moment now, interest rates are quite high, and it's no longer quite so comfortable a situation. And if I'm wrong and high interest rates persist, then we do have a problem of more of a debt problem. Worth pointing out, though, that in both the United States and much of Europe, household debt, which was so central to the financial crisis, is actually down somewhat relative to income. It's high by historical standards, but not by recent historical standards. The one place where I really do think that debt issues are a huge issue, unsustainable internal debt, is actually China, and that's a whole other story. I think it is important on the question of the recent events in Britain have obviously shaken a lot of people. But I think that it's wrong to think of what happened as being, first of all, it's wrong to think of it as being a case of loss of confidence in UK debt. What actually happened was a loss of confidence in Britain's ability to maintain fiscal restraint currently, given the government's budget, and the belief that the Bank of England would need to raise rates to curb the inflation pressure. British economy looks quite a lot like the US in terms of having high domestic demand and a tight labor market. Then there was the crisis. The Bank of England intervened. This was one of those crises which was really much more about liquidity than about fundamentals. It was one of those strangely specific things, the specific problem of pension funds that invest in long-term UK government bonds and attempt to protect themselves with derivatives contracts which are subject to margin calls. And when the price of bonds went down, they suddenly found themselves in a scramble to raise cash, which threatened to produce a sort of self-fulfilling meltdown of the gilts market. And the Bank of England, it's not clear how much money they actually laid out. The Bank of England stepped in to backstop this very special thing. It was much closer to the famous Mario Draghi, whatever it takes moment where he rescued the euro, simply by saying we will not permit a run on Southern European debt. And actually he never had to lay out any money at all. It was not QE, really. It was not an inflationary move. And I don't think that's something that should be a source of concern here about the ability to control inflation. But it's a quite subtle thing. I think that there were so many things in here, but let me talk about two other things here that came up. One is the, as you say, the cross-strait risk, geopolitical risk. That is suddenly looking like a really important factor. The world since February 24th looks very different. We now know that the age of conventional warfare attempts at conquest is not over, and that has got everybody feeling quite rattled about investments in potentially exposed locations. On the other hand, the fact that Russia's war has gone so badly for the Russians may provide partially offset that. I think any other regime that is thinking that it might not like to seize some territory that it claims belongs to it, because what could go wrong? They have the bigger army. Has just seen what happened to to a supposedly powerful army in Ukraine, and that has got to be. We don't know how much we're dealing with rational actors in all of these things, but that helps a little bit. I believe that the deglobalization issue, that's very important for Taiwan. Taiwan was one of the countries that led the way in taking advantage of the possibilities of global integration, of value chains. Your development has been based around that. And we now clearly see some retreat, partially because of perception of geopolitical risks on the part of private firms, partly because the private sector, I think in general, became aware that that logistics are more subject to disruption than they thought, and partly policy. The United States is pursuing finally a serious effort to fight climate change, but it is doing so with policies that are economic nationalism. In order to make this possible politically, very important to realize that it was a near miracle of political finesse that the United States was able to get this legislation promoting clean energy. In order to make it work, we had to, the Biden administration had to tie it to this is going to create American jobs, and therefore created the tax incentives, mostly tax credits for clean energy, were tied to purchases of products made in the United States, which is not good for a globalized trading system. People have asked me, particularly about Korea recently, has a free trade agreement, and they're saying, how is this consistent with the free trade agreement? The answer is quite possibly it isn't. But if you think that's going to change the policy, you're probably wrong, right? The fact of the matter is that climate change is an overriding issue, and trade agreements, while important, are much less important at a fundamental level. So if playing fast and loose with trade agreements is what it takes to get a climate change policy, that's what had to happen. But it does leave. It creates difficulties. There is, to some extent, the geopolitical side, at least, although private sector may be concerned about economies that appear exposed to geopolitical risks, to the extent that we have a policy. Article 22 of the GATT has suddenly become very relevant. To the extent that we have a national security policy that aims at limiting globalization, it's not simply going to be bringing production back to advanced countries. It's partially going to be the three terms that we talk about are onshoring, bring it back to the United States, nearshoring, bring it to Mexico so that it's close to the United States, but also friendshoring, which is the term I like, I think we have learned that it is safer to source from democratic governments that adhere to rule of law. And that's a plus for Taiwan in this situation. So all of these political issues become terribly crucial. But it certainly is a difficult time. Oh, and let me just say here's what I think is going to happen in terms of Fed policy. And probably, Europe is a very difficult situation because of the natural gas issue. But in the US, the Fed's goal, since expectations of inflation have remained stable, and since their goal is to bring inflation down pretty quickly so they will remain stable, what they're trying to do is basically cool the economy down. How do we know when the economy is sufficiently cooled down? the unemployment rate is not especially low. It's actually about the same as it was before this inflation took off. So, but a lot of people talk about other measures, and in particular, things like job openings. And we just had a blockbuster report in the United States earlier this week that showed that job openings have declined sharply just recently. We're just heading the leading edge of Fed contractionary. It takes time for that to take effect, and it appears to be showing up now in a sharp drop in job openings, so much so that if we look at one widely used measure, which is the ratio of vacancies to unemployment, that measure in 1 month that was an elevated measure. We just eliminated 40% of the vacancy rate gap. 2 more months, like August, and we would be basically back to probably a sustainable labor market situation. Now, that probably won't happen. It'll probably be a more sluggish process. But I believe that the overheating in the U.S. economy is going to disappear much faster than people think. That's going to take some time for that to show in the official inflation statistics. But I believe that the Fed, much sooner than people expect, is going to look at the situation and say, okay, we basically did this. And so I think that a pivot is coming sooner than most people expect. There were so many other good points made, but I can't respond to all of them.
Well, thank you so much, but you still haven't told us how much Fed is going to raise interest rate next time.
Well, I don't know what they will do. I think I will tell you what I think they should do, which is 0 or 25.
0 or 25, okay.
They will in fact do 50 or 75, but but I believe there's just so much monetary tightening. The effects of monetary tightening are already in the pipeline. The interest rate hikes that have already taken place. I've been spending much of today, in fact, looking at estimates of the lags of monetary policy, and they are substantial. And the tightening that took place so far this year is still going to be leading to economic contraction for many months to come. And given what we've just seen happening in the labor market, I think that there's a good case that the Fed has already done enough. They probably won't feel ready to stop raising rates yet, but I think sooner rather than later they will stop.
All right, thank you so much. Now we have probably 3 or 4 minutes left right before our session is over, right? Yeah, so I'd like to give 1 minute to each panelist for your final comments, please. And I think our audience today really would like to learn something about how they should formulate their investment strategy in the future from now on. Yes. Yeah.
I'll leave that to Sophie, okay. And I would like to follow up actually for Professor Krugman, just talking about the debt in the past probably was not so worrisome because of the interest rate is almost 0. But of course, for the future, that's different. And other than that, I'm especially concerned about that for the future, or at least for now, it seems that the fiscal spending continues to be aggressive. For instance, we see Germany just recently, I think last week, decided to have the 200 billion euro for the energy aid program, okay, 200 billion. And Germany, now they have the inflation rate of 10.9%, which is not only just the 40 years high, it's 70 years high for Germany. But they had no choice because of the energy prices being so high. And so they still have to issue this 200 billion and for the fiscal spending. And one last thing is about that for all this happening, that I'm very worried about the US dollars being appreciating so much, especially the pressure that add to the emerging markets. Because for the emerging markets, a lot of them have a lot of debt, government debt, corporate debt, or denominated in the US dollars. So we see as of today, for this year, there was already 70 billion US dollars outflow from emerging markets. That never really happened for this large amount. And for the whole year up until now, only 7 weeks we saw capital inflow to emerging markets. All the rest were outflows. And I think that's a big concern and for the financial crisis next time. Thank you.
All right, thank you very much. Sophia, please.
Okay, I just want to highlight on my observation on debt. I think that is a problem. As an analyst, we look at the market aggregate leverage ratio, which is much healthier than before. But if we look into the companies, the overall market leverage ratio is being averaged down by the large corporates. In fact, in United States, when we look at the listed companies, 60% of the stocks, they actually have debt to EBITDA ratio more than 5 times already. But because the overall is averaged down by large corporates. So the biggest challenge for government and policymaker, I think, is the gap in both the debt leverage ratio and the household wealth gap as well. We have more and more countries are accumulating their wealth, but we also have other families that are suffering in their financial stress. So this will create a very big challenge for government when they need to do very detailed analysis, and it becomes a challenge. Do I remove capital liquidity or do I inject more liquidity? The second point I'd like to highlight is that it's very hard to separate financial economy from financial market. This time, I think on household-wide, we see first time U.S. households are saving enough money to be a buffer if there's a financial volatility. But on the other hand, we are seeing this time financial market will be creating quite similar stress to the world economy if we don't manage the current volatility well and make it become a systemic risk. Because the end of the day, this time, asset management, due to the huge growth in the asset under management, the asset size, any small part of this market value volatility can trigger to the self-fulfilling process that Professor Krugman had just mentioned, and therefore it requires probably even bigger skill set than last time. But I do agree that with the wealth creation, accumulation in all the liquidities in the past decades, after this year, after next year, once everything stabilizes, we do have the liquidity come back to boost the market power again. Thank you.
All right, thank you very much. So Ming-Lan, please. Yeah.
Okay. We all know the Paul famous because of you were foreseeing 1997 financial crisis in Asia. Okay, now people worry about another round of Asian financial crisis this time, given that U.S. interest hike going over maybe the next year, and data shows that Korea has a lot of problem. Trade deficit from beginning of this year, now every month, and Korea already accumulated 600 billion foreign debt this until now. Korean won depreciate more than 20% this year, and Thailand depreciate more than 23% this year. So I don't have data for Thailand's foreign debt. I can't find it. But Korea, I have a lot of worry about Korea. And do you think that there's a sense that Korea is likely to have this problem again? Of course, Korea is different now than 20 years ago. But still, I worry about that because that affects Taiwan a lot, especially financial market in Taiwan. So if that happens, an investor needs to prepare for that. So I want to see your opinion. So that's my question. Thank you. Yeah.
All right, Professor Krugman, could you please use 1 minute to share your last thoughts with us?
Okay, the strength of the dollar is a major problem, primarily for emerging markets. And that is one of the great concerns. It's actually one of the reasons I would like to see the Fed stop, because it's contributing to the rising dollar, and that's creating a great deal of global stress. In terms of debt crises, emerging markets, many of them are. I don't know if we're going to have a wave of debt crises like Asia in the late 90s. Korea, you never know, but fundamentally advanced countries tend to have a lot of fiscal space, a lot of balance of payments space. They just have much more room for maneuver. And the thing about Korea is, when all is said and done, Korea is an advanced country now. Korea is no longer an emerging market. Korea is fully converged with Japan and with Western Europe and the United States in everything that matters. So I find it hard to believe that they're really going to have this crisis. But God knows, I think we will get through this without too severe a crisis unless there's another war. But I've talked to national security is not my expertise. I talk to them, but I have no views of my own.
All right, thank you so much. And, I would like to thank Professor Krugman for, spending time with us today. And right now it's almost 11 o'clock your time, right, in the evening.
It's past my bedtime.
Yeah, it's past your bedtime already? Okay, but you look great, And also I would like to thank our three distinguished panelists for their wonderful comments. And also like to thank FPAT for having arranged such a wonderful event for us. So thank you so much, Professor Krugman, and we wish you very well in the United States.
Thank
all right,
you.
Thank you.
Yes, thank you all. I would like to invite our four speakers to stand and come to the center of the stage for a group photo. And I'd also like to invite Chairman Changgen Lee of Financial Planning Association of Taiwan to come join the picture. Yes, please come to the middle, to the center of the stage. 好，我们现场来宾是不是再次掌声给我们台上的几位贵宾，还有我们的 Paul Krugman 教授带来这么精彩的交流。那这里也先跟我们现场的来宾预告，我们待会非常重磅讲者陶东呢，将会在我们10点55分的时候要准时来进行演讲，所以如果需要暂时休息的来宾，请把握时间，尽量在55分的时候准时回到座位上。好，我们继续邀请我们台上来宾看向我们前方的摄影镜头。好，我们比个赞 ，thumbs up. Thank you so much, Professor Krugman, for joining us today. Thank you. All right, thank you so much. Thank you. Thank you and good night to you, Professor Krugman. Thank you.
Good night.
Good night. Thank you so much. 谢谢。好，我们来宾这边再一次提醒各位，我们待会将会在10点55分的时候进行下一场次，所以邀请各位来宾在55分之前准时回到座位上，谢谢。
Hello, and happy World Financial Planning Day. I'm Noel May, the CEO of Financial Planning Standards Board, the standard-setting body for the global financial planning profession. Join our global community today as we promote the value of financial planning and how it can help you take control of your finances and your future.
Hello, bonjour, and greetings from FP Canada.
Greetings from Japan Association for Financial Planners.
Hi, this is Lalani Bisainat from the Financial Planning Institute of Southern Africa.
Hai, saya Muhammad Iksan. Salam dari FPAT Indonesia.
Hello, my name is Simon Culhane, and I'm the CEO of the Chartered Institute for Securities and Investment.
Pure from Financial Advice New Zealand.
Hi, this is Kevin Keller from CFP Board in the United States.
Today, the global financial planning community comes together on World Financial Planning Day.
In partnership with the International Organization of Securities Commission's World Investor Week.
To raise awareness about the value of financial planning.
And the value of working with a financial planner who has committed to the standards of competence and ethics and to putting clients' interests first.
Everyone can benefit from financial planning.
With more than 200,000 CFP professionals making up our growing global financial planning community, and with more than 27,000 of them in China.
People in Brazil and all over the world can connect with a financial planner
to talk about their goals, needs, and dreams.
and collaborate with their financial planner to develop a plan on how best to achieve their financial and life goals.
Today is a good day to begin taking charge of your financial future with the help of a CFP professional.
Today is a good day to focus on what financial decisions you need to make to stay on track to reach your goals now and into the future.
Today is the good day to embrace our World Financial Planning Day theme, which is Live Your Today, Plan Your Tomorrow.
Today, we celebrate World Financial Planning Day.
Happy World Financial Planning Day, everybody.
Happy World Financial Planning Day.
一齊慶祝環球財七日。
세계 재무설계의 날 축하합니다.
Bonne journée mondiale de la planification financière.
祝愿世界金融理财日圆满成功。
Gelukkige Wereld Financiële Beplanningsdag.
आप सबको विश्व वित्तीय योजना दिवस पर हार्दिक शुभकामनाएं.
Happy World Financial Planning Day.
Happy World Financial Planning Day.
各位现场的来宾，大家好！我们接下来非常精彩的演讲即将开始，邀请各位尽速入座，谢谢。
It's very appropriate for me to be able to speak to an investors conference about this topic because the fundamental issue here is how do we want markets to behave?
Today, I'm going to talk about economic recovery after corona pandemic, especially focusing on Asian economy.
和大家分享一些理财还有财务策划的相关的一个题目。
As we at FPSB work on this issue with IOSCO and others at the global level, and through FPAT and our network of affiliates at the local levels, we encourage you and all of our stakeholders around the world to join us in recognizing and promoting the value of financial planning. Hello, and happy World Financial Planning Day. I'm Noel May, the CEO of Financial Planning Standards Board, the standard-setting body for the global financial planning profession. Join our global community today as we promote the value of financial planning and how it can help you take control of your finances and your future.
Hello, bonjour, and greetings from FP Canada.
Greetings from Japan Association for Financial Planners.
Hi, this is Lalani Basainat from the Financial Planning Institute of Southern Africa.
Hai, saya Muhammad Iksan. Salam dari FPSB Indonesia.
Hello, my name's Simon Culhane, and I'm the CEO of the Chartered Institute for Securities and Investment.
Kira from Financial Advice New Zealand.
Hi, this is Kevin Keller from CFP Board in the United States.
Today, the global financial planning community
好，各位现场的观众也跟大家稍微预告一下，待会呢，在我们的待会精彩的讲者陶东博士上线之后呢，我们也会邀请我们在场的贵宾，还有我们的语坛主持人跟讲者一起先跟博士合照一张，之后就会邀请陶东博士来进行他的专题演讲。好的，现场各位与会的来宾，还有我们现场线上收看的朋友们，欢迎回到2022世界投资者周联合论坛的活动现场。我们现在要进行的是今天的第2个主题演讲，非常荣幸邀请到瑞信财富管理部大中华区副主席陶东博士。 博士呢，在1998年加入瑞士信贷第一波士顿，主管亚洲区经济研究，侧重对于中国经济的研究，同时也兼顾亚洲区其他国家和地区的研究。那么待会即将带来的主题是 Q1 大时代的变与不变。那么我们首先是不是先掌声来欢迎陶东博士？跟您合影，所以我这边呢事不宜迟，我们这次先来邀请我们的李长庚理事长来步上舞台，让我们掌声欢迎台湾理财顾问协会的李长庚理事长。好，那接下来呢，我们还要继续欢迎待会的语坛主持人还有贵宾一起上台。这边欢迎《金周刊》发行人梁永煌，梁发行人也步上舞台。好，接着欢迎中华经济研究院 WTO 及 RTA 中心资深副执行长李纯，以及瑞信财富管理部大中华区的我们的陶东博士在了啊，以及呢，当然还有我们现场还有退休基金协会的王丽玲理事长，我们也邀请王理事长一起上台加入合影当中，欢迎。好，我们在拍照时可以邀请几位贵宾暂时摘下口罩。那我们也邀请大会摄影帮我们看看画面的协调性。好，我们邀请现场台上的4位贵宾先看向我们的大会摄影，稍微侧身。也邀请陶东博士看向您的镜头。好，我们先拍摄第一张合影。那接下来是不是为我们竖起拇指比个赞呢？谢谢，非常感谢。好，我们掌声感谢台上的贵宾，请先行回座。那么接着的时间就让我们交给陶东博士，欢迎。
Good morning, ladies and gentlemen. I'm honored to have this opportunity to share my views on global economy. With the outbreak of COVID and the development of the pandemic, hopefully very soon I'll be able to join you in person. But today, I will make my presentation virtually. I'd like to use this chart to start my presentation. In my opinion, history is a pendulum. It swings and it repeats itself all the time. In the past few decades after the Second World War, and as you can see that every 35 years, we always saw a big swing in history. In the first 35 years after the Second World War, we saw the Western countries promoting capitalism, and those major countries focused on welfare, benefits, trying to offer benefits to employees and blue-collar laborers. And the rationale behind this is based on Keynesian economics. And that led to 35 years of economic prosperity. But in early 1970s, things changed. Because at that time, labor unions became bigger and bigger, and we saw the decouple between US dollar and gold, and government continued to increase their power and influence. And in that 35 years, we were in a stagflationary environment. And we were in a Reagan-Thatcher revolution, which led to structural change in the global economy. And because at that time, Paul Volcker increased policy rates dramatically and then successfully combated inflation. And after that, we were in the third period of 35 years. In that period, the role of government was getting smaller, and the role of capital markets was getting bigger, and capitalism revived again. Companies sought to maximize profits, and that has led to another 35 years of economic prosperity, and that was based on the modern monetary theory based on Milton Friedman. But that was not sustainable because in the early 2000s, as you could imagine, when the capital market dominated, businesses began to increase leverage and finally led to another financial crisis. As you see that after 2008, our environment changed again. Before 2008, the government was playing a smaller role while the market was playing a bigger role. And after 2008, things have reversed. What did the government do? After the Lehman Brothers, central banks implemented several rounds of QE, which was based on the modern monetary theory, which means that if we do not have inflationary problem, it is acceptable for government to have a big deficit. And central banks are allowed to print money. In fact, no central bankers or policymakers will admit that they are the followers of the modern monetary theory. But if you look at what they actually did, actually every single country in the world was doing QE. And at this moment, this historical pendulum is now changing, moving again. Take the US Fed as well as developed market central banks, for example. Now they are raising interest rates dramatically to fight inflation. But I think this is transitory. Why? Because monetary policy and the fiscal policy are two sides of the same coin. In other words, if you do not tighten fiscal policy, if you do not restore fiscal discipline, you wouldn't be able to change your monetary policy. Last week was a very good example. Last week in the UK government proposed a large-scale fiscal stimulus policy, which led to a dramatic decline in the gilts and market and in bonds. Before that tax cut plan was announced, BOE raised interest rates by 50 bips. But after the tax cut plan was announced, BOE shifted dramatically and began QE again. It is my belief that in the near term, as the inflationary pressure is not under control, we may continue to raise interest rate. But as I said, in the next 30 years, we will go back to the period where the government plays a much bigger role and the market plays a smaller role. So in the first 35 years, we focused on distribution, and the second 35 years was about efficiency. And now we are going back to focus on equal distribution of economic benefits. In other words, in the next 35 years, global growth will be slower than it used to be, and governments around the world will take different measures to redistribute wealth and income equally, and that will hinder globalization, and that will hinder the flow of capital, and that will hinder investments. And we will continue to see changes in global political environment. I remember I wrote an article for Business Today magazine, which titled, QE won't die, but it may make impacts. QE may lay dormant for a while. Right now, QE is laying dormant. Because why? QE is is dormant, not dead. It is because we still need QE when we're seeing an increasing risks in the environment. Next, I would like to focus on U.S. economy. Let's flip to the slide. This is the current state of the U.S. economy. Is it cooling down or overheated? Nobody knows. We produced a model in which we factor in inflation, employment, and stock market and consumption and business investments. By using this model, we can compare the current state of the US economy and what it used to be, and measured by standard deviation. And if you look at inflation, right now, it's deviated by 33.5 standard deviation, and for employment market, it's 2 standard deviations. As for consumption and business investment, they're both around 1 standard deviation, but it's cooling down fast. And in terms of financial environment, right now, it is in the worst environment in the past 2 decades, even worse than the Lehman Brothers period. So if you look at these 5 factors, 4 of which are overheated, and the last one is extremely overheated. What does that mean? It means that monetary policy makers are in a tough decision. It is very, very difficult for them to balance between inflation and the US economy. And right now, everybody is talking about US inflation, but if you look at the drivers of US inflation, there are different drivers, both from the supply side, especially the constraints on supply chain, which I believe that we are past the worst period of time, and at the same time, the Fed is trying to cool down inflation, but it will be at the expense of the cool down of economy. And the other driver of inflation is the external shock from rising energy prices, rising food prices, and extreme weather events. And these are out of central bankers' control. And they are highly uncertain in terms of their outlook. And the fourth driver of inflationary pressure comes from inflation expectation. Because the headline inflation remains elevated and has negative impact on households. And that has led to an increasing expectation of inflation that has led to a increasing expectation of inflation while the labor market is quite tight. In other words, the demand for labor is higher than supply. And especially in the United States, the service industry accounts for a large portion of the US economy. And that's why we're seeing an upside spiral of wage inflation. Somebody told me that the market has already priced in the rate hikes expectations. But I think that, yes, the market may have priced in the rate hikes in the next quarter or early next year. And some people believe that the Fed may pause rate hikes after next January. But after the pause, will the Fed maintain the status quo, stay put, will continue to increase rates, or even cut rates? No one knows. What I'm trying to say is that in terms of the fourth driver of inflationary pressure, that is the inflation expectation, which may have meaningful impact on our economy. In economics, we have a sort of inflation called sticky inflation. The rise of price of healthcare and education or housing. These price items tend to be slow in terms of price appreciation. But once they go up, it's difficult for them to come down. And right now in the US, sticky inflation is accelerating, and it cannot be cooled down by the Fed policy in the near term. And I believe that maybe in the middle of next year, the US inflation may be reduced to 4 to 5%, but because of sticky inflation, the US inflation may stay at 4 to 5% for a while. And we also need to observe the influence of inflation expectation on the headline inflation. And it is my belief that in the second half of next year, the chances of rate hikes are higher than rate cuts.
If the United States is going to raise the interest rate next year, although not very likely, then the interest rate will increase, yield will increase. What this chart is saying is the comparison, is the difference between U.S. yield and other countries' interest rate. You can see very clearly U.S. interest rate is much higher than the rest of the world, therefore lots of capital inflow into the United States. This is good for the United States economy, but not particularly helpful to other countries. Even it could be a disaster for certain countries. The second issue about this situation is inevitably we will have big fluctuation of interest rates. British pound, Chinese yen has dropped to historical low. RMB and other emerging market currencies are also depreciating. But how do we face the issue of Fed rate hike and strong US dollars? The responses are different. For developed countries, their big problem is domestic. So you see a fluctuation in exchange rate and the yield of their treasury notes. But emerging market has a big amount of foreign debt. Therefore, the spread between their domestic interest rate and United States interest rate has narrowed. Therefore, creates a debt crisis for emerging countries. This is the impact of the strong rate hike of Fed. Therefore, I would like to propose that the greatest uncertainty in the future comes from US dollar. Another reason let's go to the next slide. This is the other source of uncertainty and fluctuation. This has to do with energy price. The blue bar is the current trade account. Green is last year. This is the trade balance numbers. For China, the trade surplus enlarged, and US traditionally in deficit, but rather stable over the past 2 years. But you look at Germany and Japan, huge change, because they rely heavily on imported natural gas and oil. When demand factor and geopolitical risks push up energy prices, it creates very big change in the trade balance of Germany and Japan. Japan has a little bit of trade surplus, but before before the time I made up the chart, Germany actually had a trade deficit. This means developed countries other than the United States are actually impacted by inflation and also trade balance reverse. And also, number three, the third impact is the sluggish economy. I believe Europe will go into stagflation this year, and next year US and Japan. This is very difficult for everybody. United States employment is very high, almost full, but inflation is also very high. Japan is the reverse. Japanese inflation is low, and their employment market is warm. It's not very active, but they are affected, or I may say hijacked, by the Federal Reserve policy. So they have no choice but to follow the Fed Reserve policies. Otherwise, they will not be able to cope with the rising energy price, imported energy price. This will further cause import-led inflation. This is a serious monetary problem. So next year, our challenges is not about whether we will have a recession. More importantly, developed countries, UK, Germany, China, governments are facing a policy dilemma. Japan, to a certain degree, yes, but Japan has a different way to cope with it. Next chart. When the Fed is having lots of rate hikes, the market consensus is that JGB will follow up Actually, Swiss central bank is also pushing up interest rate to protect their interest rate. I'm sorry, to protect their exchange rate. Then, if the exchange rate collapses, imported energy price will take off. That will be terrible. So Swiss central bank adopted a higher interest rate to fight interest rate, but Japan did not. But on the other hand, maintain zero interest rate policy. They maneuver through intervention in the bond market, but the market does not look at this like the Japanese government. The market sees a more and more serious problem of trade deficit, but JGB is determined to safeguard the market. They will not hike the interest rate. So they can borrow at a very low cheap to buy US Treasury. The borrowing interest rate is 1%, but the return from US Treasury could be 3%. This is a very good carry trade. Therefore, in Japan, we see different views and two conflicting views between the market and Japanese central bank. Last week, in one day, Japanese central bank intervened the market to the highest degree since 1998. The interest rate of Japanese yen increased by 140 from 145 to 141, but the policy later seen very little effect because the exchange rate quickly went back to 142. I'm sorry, 144. Well, the Japan government cannot indefinitely interfere with the market. This is not an updated chart. However, if I can update this chart, the JGBs held by BOJ is much higher than the chart shows. 2 months ago, BOJ held 40% of all outstanding JGB. It is expected to increase to 83%. Almost all JGBs outstanding will be held by BOJ, sorry. Therefore, I believe what BOJ is doing is not sustainable. If one day BOJ changes the policy, there will be another huge black swan in the market. So everybody is borrowing Japanese yen because the interest rate is zero, the financing cost is zero. So people borrow Japanese yen to buy Bitcoin, to buy other assets. If BOJ changes its policy, there will be ripple effects. We will have to closely monitor what will happen in the market. We don't know what will happen, but it's likely it will be a black swan event next year. So I will close here. I look forward to exchange views with our two discussants. Thank you very much.
大家一定还意犹未尽，我们接下来即将要进行今天的第2场关键对谈，待会即将邀请陶东博士以及中华经济研究院 WTO 及 RTA 中心的李纯资深副执行长一起到我们的舞台上来进行交流，针对升息下的投资新思维来进行更深入的探讨。不过在开始之前，我们首先要先邀请这个时段的主持人步上舞台入座，让我们一起掌声欢迎《今周刊》发行人梁永煌梁发行人，有请。那么紧接着也欢迎我们的语坛人李纯资深副执行长回到我们的舞台上，有请。好，那么我们这个阶段呢，也邀请2位可以暂时脱口罩来进行。我们再次掌声欢迎台上2位。那么时间就交给主持人梁发行人。
博士好 Dr. Tao, Dr. Li, ladies and gentlemen. First of all, I'd like to thank my co-sponsors for holding this 3-day event. I believe we have learned a lot. Yesterday we listened to Dr. Richard Koo, and this morning we listened to Professor Paul Krugman and now Dr. Tao Dong. These are wonderful. We are all participants of the capital market. Next week, we are working with the Pension Funds Association to announce the results of our survey. Let me tell you, pension fund source used to be cash, but now the main form of a capital purchase is stock. It is very common for young people to invest in equity market. So how do we safeguard their investment? This is the responsibility of 6 of the co-organizers. I look forward to see Dr. Tao in Taipei. We drank pour together in Taipei. We were talking about establishing a pour tea club in Taipei. So I look forward to see Dr. Tao here. Some factors are long-term, some are cyclical. But we're now entering a new cycle. As Dr. Krugman talked about, demographics is another issue. Technology, yes, is another impact. And there are also special factors, COVID-19. 3 years ago, nobody foresaw this. And nobody expected a breakdown of supply chain. Nobody saw this 3 years ago. And the net zero target, we all know about this, but we did not know it's so immediate. We feel this because of the extreme weather condition. Number 3, geopolitics. This is such a big change. 5, 6 ago, when U.S.-China started trade war, people thought it was temporary, but it lasts until now. And now we have to reposition our asset allocation. A few things we have to do. First of all, let me throw out a few questions. We have to finish before 12. Let me raise a few questions. You don't have to answer right now, but I'll let you think about it.
So Dr. Tao said that the Fed is raising interest rate dramatically and other central bankers are following suit. But Taiwan's central bank is one of the central banks that's still almost staying put. So what are your suggestions or advice for Taiwan Central Bank. I think I asked the question on everyone's behalf because right now Taiwan Central Bank continues to stay put. You can think about this because this is not an easy question. Because when we talk about Taiwan central bankers, people tend to feel a bit nervous or cautious. But when it comes to inflation in the near term, it is difficult to cool down inflation. But what kind of indicators or signals can we observe to decide whether or not the Fed is at the end of its rate hike cycle or inflation is cooling down? To be honest with you, no one knows. According to the statement issued by the Fed, it has been reiterating that it will be data dependent, which means that when there is meaningful change in the environment, the Fed will take action and change its course. And why is that? It's because the current inflationary environment is something that our generation has never been through before. So for the Fed to shift its policy course, I think it has to see the following two signals. First, something bad happens to the economy, meaning that a meaningful contraction of economic activities. And when that occurs, the Fed may consider stopping rate hikes. And that's what most people are expecting. Most people are expecting that the Fed may stop or even pause rate hikes maybe spring next year. And another signal to look at is the employment or the job market enters a persistent decline. And that may lead the Fed to cut interest rates. Well, it is my belief that the United States may see its economy contract in the first half next year. And in terms of the job market, it may take some time to reverse. So that's why the Fed will go through several stages in terms of its policy rate hikes. Right now, the Fed is raising interest rate, and in the middle, there's a second stage. And the third stage may be a stop or the pause of the rate hike cycle. But during the process, if something bad occurs and lead to systemic risk, that may change or shift the Fed's policy immediately. However, for the Fed to shift its policy, it has to see a persistent decline in the job market or economic activities, and when the inflation remains consistently below 2%. And another thing is that right now the Fed is very hawkish. One of the reasons may be that the US may have its midterm election in mid-November. And after that, the United States will be preparing for the presidential election. Right now, everyone is concerned about inflation. And 2 years later, when everyone is preparing for the next presidential election, at that time, the Fed may shift its focus on growth instead of inflation. Thank you, Dr. Tao, for your insights. Obviously, we need to be data dependent, and also you have to read Dr. Tao's articles in Business Today magazine because you will learn his latest insights. And I would like to ask Dr. Lee, in terms of the trade numbers you observe, do you see any recession risks? Well, first of all, I completely agree with Dr. Tao's comments. In fact, in the past 2 years, and even today, everyone is looking at history, not technology, because we always say that history repeats itself, and we would like to learn something from the past and help us to deal with the current situation. Like Churchill said, how far you can look ahead depends on how far you can look back in history. In fact, if you look back at the 20th century, it took around 24 to 36 months for us to bring through a cycle. That's very similar to what Dr. Krugman said earlier. If you look at the U.S. price increases, and when it began, it began around Q1 or Q2 last year, and it's been 15 months today. So if history does repeat itself, I think that maybe in 12 or 14 months, we may return to a more balanced environment. Well, yes, it will be a very painful period of time, but as Dr. Tao said, that it would take some time to digest all the challenges. But the good news is that we are already halfway through. But if you look at the numbers, if you look at the export number from January to August this year, our export increased by about 45 billion US dollars. And the import number increased also by the similar amount. Taiwan is an important export and import country, and our import and export performance sort of reflects the global trade environment. And it seems that if you look at the trade numbers, the global economy doesn't seem to contract meaningfully. But because of the appreciation or strong dollar, our export increased by 22 to 24%. But at the same time, Taiwan dollar depreciates by also around 22 to 24%. And which means that the quantity or the number of containers that we ship out may remain the same or even decrease. Actually, the number of containers decreased by 150,000 containers. But at the same time, the value of our export remains the same or even increased by $45 billion. It's because Taiwan dollar depreciates against the US dollar. In fact, from the start of this year, every single month, the number of containers shipped out decreased by about 10,000 every month. And according to the numbers issued by the Ministry of Economic Affairs compared with previous month, except for the semiconductor, other trade figures have meaningful contraction this month. So in other words, yes, the global demand has contracted as well. In fact, in the first half of this year, from January to July in Europe, their exports were increasing. However, it's now slowing down again. It echoes back to Dr. Tao's presentation because of inflation. And again, I have to say that every country, every region is different. In Europe, because it's very sensitive to energy prices and it's now entering winter. So the European consumers may become more conservative. And in China, in terms of its demand, in fact, probably after the 20th Party Congress in mid-October, China may have some more stimulus policies to support demand. But every single country is different. they face different variables and challenges. So I think that it's unlikely to return to the glorious days last year. We may move into the next stage and face the reality. Thank you, Dr. Lee. So, any suggestions or advice for Taiwan Central Bank? And another question for you is that the Chinese economy was impacted by its zero COVID policies. So, what is your outlook for the Chinese economy? So, I would like to talk about the Chinese economy. The impact of COVID on the Chinese economy is unprecedented in the past 3-4 decades, and the impact is on many different aspects: on consumption, on the housing market, on domestic consumption, and also foreign investment. But the biggest impact of COVID falls on sentiment. I do believe that the Chinese government may ease its COVID policy, but I do believe that they will continue with their dynamic zero COVID policy. I think the Chinese economy will be completely reopened. Not now, probably next March. In other words, before March next year, the Chinese economy will remain closed. But the thing is that I think that we have passed the worst time, and the Chinese government is now trying to it will have to strike a balance between economic development and COVID control. In terms of Taiwan's policy rates, I think Taiwan's inflation is different from that in the US or Europe. And it is that difference that dominates Taiwan's monetary policy, which means that Taiwan's monetary policy doesn't need to be in line with the US or Europe. And it's not just Taiwan. As you can observe in other Asian countries, the level or the degree of their rate hikes is much lower than the US and Europe. But yes, the US has increased policy rates dramatically. And that may further tighten the global economy and financial condition when the economy is already contracting. That's the challenge we have to face today. So, well, when it comes to the Central Bank of Taiwan, it depends on how you look at their performance. But as Dr. Tao said earlier, Taiwan's CPI last month was 2.6% YOY. So compared with Western countries, we do not have any inflation. And at the same time, we have to, we are sort of like in the Switzerland model. In other words, we are also increase our policy rates a little bit in order to avoid import inflation. So I do believe that the Taiwan Central Bank has been doing a great job so far because it has successfully maintained our economic and market stability. So I think that that's quite successful. And another point to share with you is that recently people are wondering why we target 3%, 2% of inflation. Why not 3% if we set the target at 3%? well, we don't have any inflationary pressure. And why at 2%? Some people say that it's because central banks hate inflation, and that's why they lower the inflation target to 2%. If you increase the target to 3%, maybe 1/3 of the countries around the world do not have any inflationary problems. So what I'm trying to say is that given all the inflationary pressures and uncertainties in the world, we may have different ways to deal with COVID and different ways to deal with inflation. We may come up with some new measures or solutions, but given uncertain prospect, I think that we may come up with new measures, new ways to predict the economy.
Let me say a few words. I'll follow Dr. Lee's comments to say one more thing. In the early 1990s, when the Berlin Wall collapsed, brought us peace bonus, non-inflationary bonus, and globalization bonus. Now they're all gone. So therefore, we are facing long-term inflation pressure. Therefore, this is different from what we see today, energy inflation. But I can be sure that part of the inflation will sustain and remain. Why 2%? As Dr. Lee said, this is an old target, old number. This is the old policy range. I think eventually the policy makers will have to change that 2% threshold. Maybe 3% or anything possible. So when you play football, you cannot go, you just change the gate. This is very clear now. Thank you very much. Our topic is what do we do when inflation, what do we do in terms of investment facing inflation? We see a new norm is high inflation. Now, Mr. Kuz talked about the necessary evil of green inflation. Dr. Tao, in any words on asset allocation for investors, please? I am an economist. I can only give you answers from the macroeconomics perspective. Number one, change. The time has changed. MMT, central banks, and energy price soaring. In addition to geopolitics, there are other environmental factors causing the high rising energy price. For example, the right-wing movement in Europe. So number one is the time has changed, the risk is higher. Number two, almost all central banks around the world don't really know what to do in the future. Policy can switch directions very quickly. They can do this aggressively in a very fast pace or do it slowly. Number three, in the future, there will be two kinds of people. Number one, who knows how to invest. The second type is who doesn't know, who do not know how to invest. Number four, we will see adjustment of monetary policy and fiscal policies in the coming years. But the decision mechanism will not change because the mindset of decision makers will not change. Politicians are not ready to take up the pain caused by a recession. This will be long term. In the short term, because of all these risks, I believe when you see this risk, you leave, you flee to safe haven. In the long term, the main theme of holding assets is still a very true thing for you. If you do not start investing, your life will be miserable because MMT will continue, inflation will continue. Thank you. I'm sure you will agree with me. In the future, there are people who know how to invest, meaning our friends here and participants online. And there are also people who do not know how to invest. I think finally, let me quote Chairman Lee, what he said in opening remarks. I wish you a wonderful year and make a lot of wealth through your investment. Thank you very much. Thank you.
我们梁发，那我们邀请现场2位掌柜贵宾可以好，先起身。好，那我们今天知道陶东博士还另有药物，所以我们今天前面已经先合影过。那我们这边是不是再次掌声给我们现场3位贵宾？谢谢。好的，谢谢博士。好，各位来宾，我们今天上午的论坛就到此非常精彩的圆满结束。那下午我们邀请到了台湾金融研训院院长、日本理财规划协会理事长、马来西亚理财规划协会执行长，带来许多的分享议题，各位千万不要错过了。我们2点准时回到现场，线上朋友也是2点见，谢谢。
Hello, and happy World Financial Planning Day. I'm Noel May, the CEO of Financial Planning Standards Board, the standard-setting body for the global financial planning profession. Join our global community today as we promote the value of financial planning and how it can help you take control of your finances and your future.
Hello, bonjour, and greetings from FP Canada.
Greetings from Japan Association for Financial Planners.
Hi, this is Lalani Besagnat from the Financial Planning Institute of Southern Africa.
Hi, saya Muhammad Iksan. Salam dari FPSG Indonesia.
Hello, my name's Simon Culhane, and I'm the CEO of the Chartered Institute for Securities and Investment.
Pure from Financial Advice New Zealand.
Hi, this is Kevin Keller from CFP Board in the United States.
Today, the global financial planning community comes together on World Financial Planning Day.
In partnership with the International Organization of Securities Commission's World Investor Week.
To raise awareness about the value of financial planning.
And the value of working with a financial planner who has committed to the standards of competence and ethics and to putting clients' interests first.
Everyone can benefit from financial planning.
With more than 200,000 CFP professionals making up our growing global financial planning community, and with more than 27,000 of them in China.
People in Brazil and
It's very appropriate for me to be able to speak to an investors conference about this topic because the fundamental issue here is how do we want markets to behave?
Today, I'm going to talk about economic recovery after corona pandemic, especially focusing on Asian economy.
和大家分享一些理财还有财务策划相关的一个题目。
As we at FBSB work on this issue with IOSCO and others at the global level, and through FPAT and our network of affiliates at the local levels, we encourage you and all of our stakeholders around the world to join us in recognizing and promoting the value of financial planning. Hello, and happy World Financial Planning Day. I'm Noel May, the CEO of Financial Planning Standards Board, the standard-setting body for the global financial planning profession. Join our global community today as we promote the value of financial planning and how it can help you take control of your finances and your future.
Hello, bonjour, and greetings from FP Canada.
Greetings from Japan Association for Financial Planners.
Hi, this is Lalani Bisaynut from the Financial Planning Institute of Southern Africa.
Hai, saya Muhammad Iksan. Salam dari FPSB Indonesia.
Hello, my name's Simon Culhane and I'm the CEO of the Chartered Institute for Securities and Investment.
Kira from Financial Advice New Zealand.
Hi, this is Kevin Keller from CFP Board in the United States.
Today, the global financial planning community comes together on World Financial Planning Day.
In partnership with the International Organization of Securities Commission's World Investor Week.
To raise awareness about the value of financial planning.
And the value of working with a financial planner who has committed to the standards of competence and ethics and to putting clients' interests first.
Everyone can benefit from financial planning.
With more than 200,000 CFP professionals making up our growing global financial planning community, and with more than 27,000 of them in China.
People in Brazil and all over the world can connect with a financial planner
to talk about their goals, needs, and dreams,
and collaborate with their financial planner to develop a plan on how best to achieve their financial and life goals.
Today is a good day to begin taking charge of your financial future with the help of a CFP professional.
Today is a good day to focus on what financial decisions you need to make to stay on track to reach your goals now and into the future.
Today is the good day to embrace our World Financial Planning Day theme, which is Live Your Today, Plan Your Tomorrow.
Today, we celebrate World Financial Planning Day.
Happy World Financial Planning Day, everybody.
Happy World Financial Planning Day.
一齊慶祝環球財策日。
세계 재무설계의 날 축하합니다.
Bonne journée mondiale de la planification financière.
祝愿世界金融理财日圆满成功。
Gelukkige Wereld Financiële Beplanningsdag.
आप सबको विश्व वित्तीय योजना दिवस पर हार्दिक शुभकामनाएं.
Happy World Financial Planning Day.
Happy World Financial Planning Day.
我觉得年轻朋友应该好好的了解现金流量的概念，而且是要透过时间的复利，用最小的成本来储蓄自己的第一桶金。所以应该可以透过定期定额做一些投资理财，包括买基金或者是买投资型的保单，这些来做自己的一个退休理财的概念。自己也是透过定期定额买基金跟买保险的方式来做生活当中的财富跟退休理财的规划。那我觉得定期定额是一个很重要的一个习惯啊，包括说我们可能要注意适时进场啊，就不要当股市比较低的时候，或者是可以进场的时间点的时候，我们可以买比较多基金啊，就是储蓄比较多。那在获利了结的部分，就是设立一个停利点，然后可以适时出场。那透过这样不断的重复的话，我相信可以帮年轻人很快的存到第一桶金。我觉得年轻人当然是没钱，可是小钱可以变大钱。我举例来讲，如果你想存1000万的话，25岁开始，每一个月只要存5000块。报酬率是6% 的话，到你退休的时候，65岁退休，你就有1000万哦。所以其实时间的复利可以帮助年轻人把小钱变大钱。所以年轻人理财一定要善用，在薪水比较低，或者是你能够储蓄小钱的时候，透过时间的复利让你变大钱。聪明理财可以帮人生追梦。我觉得这个是年轻人应该好好的想一想，就是我如何用最少的成本去追求自己的梦想。那这个部分就很包括你的求学、买房，到最后你可能可以过比较适足的生活。所以这个是一个很重要的 slogan， 希望大家能够从小开始变大。
Launched in 2006 by some of the world's largest institutional investors, the Principles for Responsible Investment, PRI, aims to bring sustainability into capital markets. It is widely recognized as the most influential organization devoted to the advancement of ESG investing globally. Let's review the 4 types of responsible investing strategies in the PRI reporting framework, which follows those developed by CFA Institute and used by the Global Sustainable Investment Alliance, among others. Screening. Negative screening, excluding sectors, companies, or practices based on specific ESG criteria. Positive best-in-class screening, investing in companies with positive ESG performance. Norm-based screening, screening investments against minimum standards of business practice based on international norms. 81% of PRI signatories reported using the screening strategy. Thematic, investing in assets specifically related to sustainability. 33% of PRI signatories reported using the thematic strategy. ESG integration, the systematic and explicit inclusion of ESG factors into financial analysis. 87% of PRI signatories reported using the ESG integration strategy. Engagement. Individual. Investors' internal staff using shareholder power to influence corporate behavior, including through direct corporate engagement. Collaborative. Similar to individual engagement, but undertaken jointly with other investors. Internal voting, using proxy voting guided by ESG guidelines, where voting decisions happen internally. 93% of PRI signatories reported using the engagement strategy. Are you prepared for the rise of ESG?
股票有赚钱吗？
没有，最近量很低，很难买。
我也是，可是我昨天收到一个脸书讯息啊，你看，就是那个很有名的分析师啊，他主动传讯息给我，跟我说他可以教我投资。
真的哎，可是有那么好的事情吗？刚刚的对话，不晓得你有没有觉得很耳熟？最近金融市场忽然冒出一大堆股市名师啊、分析师助理，说要教你投资，但是很奇怪的是，他们都会要求保密，而且告诉你的投资标的连听都没有听过。你以为这是独家内线吗？大错特错，因为这些通通都是网络诈骗。 你要知道，现在的诈骗集团可不是单单打电话要求你汇款而已，现在的诈骗手法已经升级到用社群网络冒名顶替，以假乱真。例如，他们冒用的是股市名人、投顾名师，甚至是证券商以及基金公司，就告诉你说自己是证券商的操盘手啊，或者是基金经理人，然后透过 FB 或者是 LINE 群组开设假账号。这种假账号大头照看起来都是名师本人，但是照片根本就是偷来的。还有他设立的 ID 会非常相似名师本人的账号，例如多一个 @ 或者是多一个字母，企图混淆视听，让人误解。然后他会不断传讯息，问你想不想要学投资，告诉你他手上有内线独家可以报名牌，还会每天传送一些投资的资料来塑造一个专业形象。平常还对你嘘寒问暖，贴对账单来博取你的信任。这一切的目的就是为了让你加入投资群组、投资平台，甚至是招揽会员。我们现在就要来解析这些诈骗新手法。很多人都会透过副委托的账户去投资国际股市，诈骗集团就是看准这个风向来报名牌。他会先要求你去开副委托的账户，然后去买港股里面的仙股，还告诉你稳赚不赔，保证获利。如果有人买了仙股，股价却暴跌，诈骗集团还会说不怕，要逢低继续加码，或者又叫你去买另外一只仙股。如果有人不愿意买的话，就会被踢出这个投资群组。但是仙股真的能买吗？其实所谓的仙股就是香港的创业板股票，它大部分股权很集中，而且呢都是属于借壳上市，遭到特定人士炒股价，容易大起大落。当诈骗集团把股价炒高之后，就开始割韭菜，你连哭都不知道要去哪里哭。